because today we have many international participants, I will speak in English. We provide all the participants with a translation. So, dear guests, friends, and partners, in person here and online in our YouTube channel, thank you for being with us today in our international conference, Corporate Governance and Decarbonization Transformation, organized by the National Corporate Governance Commission with a partnership with the Association of Bulgarian Investor Relations Directors and the Bulgarian Industrial Capital Association. My name is Daniela Peeva, and I am current chairperson of the National Corporate Governance Commission. I'm extremely happy that we have a lot of supporters of this event. Thank you for all our sponsors for supporting this event. Also, thank you for all our institutional partners. A lot of organizations supported our conference. And of course, thank you for our media partners. It is a pleasure for me to invite here the first chairman of the National Corporate Governance Commission and the current Minister of Energy, Mr. Rumen Radev, who has kindly accepted to open our conference today. Mr. Radev set the standards, and high standards at that, in the leadership in the corporate governance field. Please, Mr. Radev.
Уважаеми гости, уважаеми участници във форума. През последното десетилетие интереса на участниците на глобалните финансови пазари към инвестиране в устойчиви и социално отговорни проекти и бизнеси съществено се засили, в резултат на което, естествено, голяма част от капиталовите парични потоци се и насочиха именно към такъв тип дейности. Ще припомня един доклад на PricewaterhouseCoopers от миналата година, съгласно който компаниите за управление на активи се очакват до 2026 година да увеличат глобалните си инвестиции в социално отговорни и устойчиви бизнеси до 33,9 трилиона долара. Тоест, за по-малко от 5 години този тип инвестиране ще представлява над 1/5 от всички активи под управление. При социално отговорното инвестиране или така нареченото устойчиво финансиране, наред с финансовите аспекти от бизнеса, инвеститорите придават същата, в много случаи по-голяма, тежест на нефинансови критерии – екологични, социални, управленски. Целта е инвестиране в компании или съответно подкрепа на проекти, които едновременно отчитат добро финансово представяне, но и оказват положително въздействие върху екологията и устойчивото развитие на икономиката, но и на обществото в цялост. Все повече частни и институционални инвеститори възприемат устойчивото финансиране и го интегрират в своите инвестиционни стратегии. По този начин избягват, а някои ограничават до минимум вложенията си в компании, за които се смята, че не развиват дейността си по устойчив начин или не отделят достатъчно внимание на ESG аспектите от бизнеса си. В резултат борсови посредници, инвестиционни банки, компании за управление на активи започнаха да предлагат борсово търгуеми фондове, други финансови продукти, например зелените облигации, които следват тези стратегии за ESG инвестиране. Вие знаете какво представляват зелените облигации като дълго финансов инструмент. Разбира се, набират паричен ресурс и финансират нови или пък съществуващи проекти с позитивно въздействие върху околна среда и климатични промени. Това са основно проекти в областта на възобновяема енергия, енергийна ефективност, съхранение на енергия, екологичен транспорт, устойчиво управление на водните ресурси, отговорно управление на отпадъците, опазването на водните екосистеми, устойчивото земеделие и така нататък. Емитенти на този тип облигации биха могли да бъдат отделни компании, банки, но и правителства, общини, наднационални институции. Крайната цел на тези практики е както смекчаване на вредите върху околна среда и ограничаване на климатични промени, така и формирането на кръгова икономика. И специално ще подчертая, след толкова говорене, в крайна сметка да припомня какво е кръговата икономика. Това е модел, насочен към удължаване на жизнения цикъл на продуктите. На практика означава възможно най-дълго споделяне, заемане, повторно използване, поправка и едва тогава рециклиране на съществуващите материали и продукти. Концепцията за кръгова икономика се изгражда в ясен противовес на традиционния линеен модел, при който използваме суровини, създаваме нещо от тях, консумират се и остатъците се изхвърлят. Старият линеен модел разчита на големи количества евтини и достъпни материали и източници на енергия. Но живота не е такъв. Отчитайки бързото развитие на ESG тенденциите при формиране на инвестиционни стратегии на различните участници на капиталови пазари, в качеството си на емитент на 2 емисии еврооблигации на обща стойност 1,2 милиарда евро, Български енергиен холдинг ЕАД има присъден ESG рейтинг от Sustainalytics, световно признат доставчик на такива изследвания, рейтинги и данни, част от структурата на Morningstar. Като водеща енергийна компания в страната и на Балканите, в синхрон с климатичните политики на Европейския съюз и необходимостта от инвестиции в устойчиви дейности, БЕХ група има ангажимент в подкрепа стремежа на България за намаляване на вредните емисии. От особена важност за енергийния отрасъл в страната, в крайна сметка като министър на настояща енергетика, това е и фокуса, който искам да поставя и връзката с идеята ни за социална и корпоративна отговорност. Важно е да ускорим развитието на проекти за балансиращи мощности, за произведената енергия от възобновяеми източници, за съхранението на енергия, както и увеличаване на междусистемната свързаност. Финансирането на подобни инвестиционни намерения е в унисон с основните цели на Европейския зелен пакт, така наречената зелена сделка, често пъти набеждавана за неблагополучие, особено на политици. Тези основни цели, да припомня, са преход към нисковъглеродна икономика на Европейския съюз чрез все по-голям дял екологично чиста енергия. С този пакт всъщност целим превръщането на Европейския съюз в общество с модерна, ресурсно ефективна и конкурентно способна икономика, в която през 2050 година да няма нетни емисии на парникови газове, а не само на CO2. И икономическия растеж да не зависи от внос на енергоносители. Понякога губим целите си в дребното политическо или пък дори семейно говорене, но пропускаме и често пъти подминаваме липсата на конфликт в тези цели. Ние можем да постигаме и устойчивост, можем да постигаме и конкурентоспособност. Да не го забравяме. В тази връзка се предвижда в националните законодателства на държавите членки да бъдат вкарани съответните мерки, чрез които да бъде извършен справедливия преход към въглеродонеутрални и природосъобразни икономики в рамките на Съюза ни. Пионер в областта на екологичните инициативи Европейския съюз. За да стимулираме тези благоприятни за климата инвестиции, имаме и пакет от мерки за финансиране на устойчив растеж, основен сред които е и регламента за таксономията. Съгласно регламента за таксономията от януари тази година, 23-та, нефинансовите предприятия оповестяват информация за това каква част от оборота си, капиталовите си разходи, оперативните разходи, насочват към екологично устойчиви дейности. Да, регулаторен похват, но все пак това е едно добро начало, чрез което се цели да се стимулира екологично отговорни дейности и инвестиции за постигане на устойчивата икономика. Да споделя, че основният нормативен акт в България, който урежда начина за определяне и публично оповестяване на държавната политика в областта на публичните предприятия, въвеждането на стандартите за добро корпоративно управление на публичните предприятия, както и задълженията за оповестяване и прозрачност на самите предприятия, но и на органите им за управление, е Законът за публичните предприятия. С приетите поправки и съответно правилника за неговото прилагане, основата на законодателната и институционалната реформа е приведена в съответствие с стандартите, заложени в насоките на ОИСР за корпоративно управление на държавните предприятия. С приемането на тези два законодателни акта, държавата следва насоките на ОИСР за корпоративно управление на държавни предприятия, Приетите нормативни актове предоставят на държавата като собственик и на държавните предприятия една предвидима рамка, така че ролята на собственик да е ясно определена от другите й функции. Припомням и това, че с решение на Министерския съвет е одобрена и политика за участие на държавата в публичните предприятия. Тя има единствено цел защита на националните икономически и стратегически интереси на държавните предприятия в Република България в съответствие с общите цели за дългосрочен характер и в съответствие с обосновката на собствеността на държавата, но и на очакваните резултати. И това е нещо, което трябва да става по еднозначен, публичен начин. Позволете ми накрая да благодаря на организаторите за отправената покана. За мен е огромна чест и удоволствие да открия този форум. Пожелавам на всички успешни дискусии и работа. I'm not sure it's allowed.
Yeah. This is our exclusive gift for our speakers. It is very interesting because it is elaborated by a social company as a support of a social economy. So I think it will be very nice to have it. So thank you again, and I hope that you here see this which you exactly aimed to achieve as a first chairperson of the National Corporate Governance Commission. Thank you again. To be honest, for me, today is a very important day because more than 3 years ago, I started here my leadership as a chairperson of the Bulgarian Corporate Governance Commission right here in this hall. I started the mandate with a very nice round table called 10 years of the National Corporate Governance Commission. And today I am very happy to open this conference as the last event of my mandate. Thank you again for all of our supporters, sponsors, media partners, and also institutional partners. So let the conference begin. Before inviting the first speaker, I would like to inform you that the Q&A session after each panel will be realized by Slido system. It is very easy. Simply go to www.slido.com and register for this event, #3898671. And this option is also available for our online participants. So let me start with our keynote speaker. I'm very happy to invite here on the stage Fiana Jordan. Fiana kindly accepted our invitation to be a keynote speaker in this event. She is senior policy analyst in the OECD Directory for Financial and Enterprise Affairs, Capital Market and Financial Institution Division. Fiana supports OECD Corporate Governance Committee, the global standard setter of the corporate governance. She is responsible for the accession review of Bulgaria, as well as a project with the Middle East and Africa. She also leads the work on women on boards and senior management, as well as the contributes to the global relation strategy. It's a pleasure for me to invite here on the stage Fiana as a keynote speaker.
Good morning. Thank you. I've met many of you here a few weeks ago in Sofia when we had our fact-finding mission for the accession review, and so I'm happy to see you in this different context. Thank you so much to Daniela and also Bistra for inviting me here and giving me a good excuse to come back to your lovely city, despite the weather. I forgive you, but it's really, really a pleasure to be back here. Also, something that maybe for your small country may feel good is that this is the first time that we are presenting the new revised G20 OECD principles of corporate governance since they were adopted by the OECD ministers in June. So you are the very first country to hear about the changes to the principles. So that's exciting. I think it comes as no surprise to many of you that we have all been grappling with rapid changes and major challenges in recent years, including growing impacts and concerns around climate change, the rapid growth of digitalization, and geopolitical conflicts, which, among other consequences, are creating uncertainties and vulnerabilities. And these developments have had a huge impact on the private sector. I don't have to tell you that. Most of you are from the private sector. But putting corporations' adaptability and resilience to the test, and raising questions as to whether current frameworks for corporate governance remain fit for purpose. And this is why the OECD and its Corporate Governance Committee decided to undertake a comprehensive review of the G20 OECD principles of corporate governance. The review started in November, and as I mentioned, Council just adopted the new principles. And this is something that I will present to you in a few minutes. I will also share with you some recent facts that we have gathered from 49 jurisdictions on corporate governance practices, and also, of course, focus especially on the sustainability issue with the new chapter in the principles on this topic. So, oops. I think most of you are familiar, but for those who are not, and maybe for those online who are new to the corporate governance conversation, just to remind people about the G20 OECD principles of corporate governance, which are the global standard in corporate governance around the world. They were first issued in 1999, and they were endorsed by G20 leaders in 2015 when they were last revised. And this actually really increased their global relevance and importance. And you might say, what is the point of these principles? Their role is really to help policymakers to evaluate and improve the legal, regulatory, and institutional framework for corporate governance. And actually, there are currently 53 jurisdictions that have adhered to the principles, including all G20 and Financial Stability Board members. So just a quick timeline on the revision. As I mentioned, we started the review in November. It was completed in March. We had the approval by the OECD Council in June, and the next step in just a few days will be the G20 meeting of finance ministers, and then the leaders, which will hopefully endorse we expect, the principles in September. So the actual public launch will be in September. So you're getting a sneak preview here. So I hope you feel special. Of course, like we proposed, we did ourselves a very large public consultation. And so that's important to mention. So this slide shows the 10 priority areas that the OECD Corporate Governance Committee identified for the review of the principles. And these priorities support a number of OECD and G20 strategic priorities, including, of course, managing the climate transition, supporting digital transformation, and promoting a resilient post-COVID recovery. Unfortunately, I don't have time to go through all of them, and given the topic of this conference, I will focus on climate change and ESG risks, which resulted in a whole new chapter on sustainability. Oops. Wait, something is strange. Okay, well, there's a slide missing, but let me see. Oh, there it is, okay. So just very quickly, the 6 chapters of the principles, for those not familiar with this topic, just so you can see the overall structure. So we have the basis for an effective corporate governance framework, which is really about promoting transparent and fair markets. I just wanted to say that because a lot of people think of corporate governance as just a legal check the box sort of process, and it's really not. It's really about promoting a transparent and fair market. It's about efficient allocation of resources, and of course, within the context of the rule of law and supporting effective supervision and enforcement. So that's one of the chapters. The other is the rights and equitable treatment of shareholders and key ownership functions. Then we have a chapter on institutional investors, stock markets, and intermediaries. Of course, disclosure and transparency, the responsibilities of the board, and the important new chapter on sustainability and resilience, which I will now focus on in more depth. Do a deep dive. Put on your bathing suits. We're going to go deep into this area. So, as I mentioned, this is the biggest change in the principles. During the discussions on the priority areas for the review, countries expressed a strong interest, no surprise there, in the issue of sustainability and resilience. They also expressed a strong desire to see the revised principles reflect the growing challenges companies are facing in managing climate-related and ESG risks and opportunities. So in addition, this edition highlights the visibility that we wanted to give to this topic, and also easily accessible issues that we wanted to put there together. So grouping the recommendations together to show the connections between disclosure, shareholder rights, the role of stakeholders, and board responsibilities as it relates to sustainability. So we wanted to create a holistic kind of picture. An important element of this new chapter is its full incorporation of the previous stakeholder chapter, with some revisions and new recommendations on taking into account the interest of stakeholders also in that area. So the revisions promote the disclosure of sustainability-related information and the use of internationally recognized standards that facilitate the comparability of sustainability-related disclosure across markets. And you'll hear this word a lot because comparability is very important, not only to regulators, but also to, of course, the market players. So the revised text also seeks to provide guidance on the concept of materiality, which is key. On materiality, the revisions clarify that information should be considered material if it can reasonably be expected to influence an investor's choice, voting decisions, investment. The investors are therefore identified as the primary users of corporate disclosure. However, the revisions also recognize that this definition of materiality may include matters that are critical to other stakeholders, even when their short-term financial relevance is not evident. The revisions also strongly support the adherence of jurisdictions to internationally recognized standards and that facilitate the comparability of sustainability-related disclosure across markets. And also, the revisions ensure that verifiable metrics are disclosed. You know, we often say you can only change what can be measured. So the metrics is extremely important. Investors should be able to assess the credibility and progress of a company towards meeting an announced goal or target. So it's not enough just to have it there. You also need to be able to assess it. And one last point, which is also quite important, is the external assurance as a long-term consideration for regulators of the sustainability disclosure. Sustainability-related disclosures reviewed by an independent, competent, and qualified attestation service provider could enhance investor confidence. And as we all know, trust is a huge component of developing the capital markets. So this is very important. And considering the variety of the positions and progress in this area across jurisdictions, this new sub-principle suggests considering a phased-in approach of requirements with a long-term objective to work towards convergence of assurance levels between financial and non-financial reporting. I know the Ministry of Finance is here, so I hope you're listening carefully. Of course, very important in the corporate governance discussion of this issue is the role and responsibilities of the board on sustainability matters. When fulfilling their key functions, boards are increasingly ensuring that material sustainability matters are also considered. For instance, boards may assess if and when sustainability matters affect company risk profiles. Such assessments may also relate to key executive remuneration and nomination processes. Along these same lines, the revision highlights the importance for the board of long-term thinking, which may be supported, for instance, by the adoption of the business judgment rule, or a similar safe harbor that protects boards against litigation if, and this is important, if a decision was made in good faith and with due diligence. This allows directors to assume the risk of a decision that is expected to benefit the company in the long term, but which would eventually be unsuccessful because, of course, risk-taking is a big part of doing business, and some of it is very important and healthy. So we want to encourage that, but within the framework of the business judgment rule. The revisions also seek to promote dialogue between a company and its shareholders and stakeholders on sustainability matters. While general shareholder meetings provide an important forum for structured decision-making, dialogue between a company, its shareholders, and stakeholders provides an essential role in informing management's decision-making and building investor trust. Again, you'll hear that word a few times in the long-term business strategy. So while such dialogue may be useful for a range of issues, this is especially important to improve a company's sustainability and resilience, which may represent short-term cash flow outflows while generating long-term benefits. So we're always looking at the balance of these things. There's a lot more to say on board responsibilities and duties that the revised principles cover, but just very quickly, there's a lot in there on the use of board committees, especially looking at the issue of sustainability and recognizing the role of risk, technology, and sustainability. So there are increasingly companies are introducing committees focused on this. And the principles have a big change in that regard also to diversity criteria, including gender diversity. There's also a new emphasis on risk management by the board, and also with regard to remuneration, where often we are seeing more links between remuneration and sustainability targets. So now I would like to get a bit more, even deeper into some of the observations we have gathered from our work looking at the implementation of the G20 OECD principles of corporate governance, because like we recommend to policymakers, we need to monitor and keep track and assess in an aggregated way what is going on also in practice. So this is what we do in the OECD Corporate Governance Fact Book, which is published every 2 years since 2015. It supports, like I said, the implementation of sound corporate governance practices by providing easily accessible and up-to-date factual information that's important for understanding countries' institutional, legal, and regulatory frameworks. So governments, regulators, other stakeholders can use the fact book to understand what are the latest corporate governance regulatory trends and to compare their own frameworks with that of other countries. It's very exciting. We have the new version coming out at the same time as the new G20 OECD principles in September. Unfortunately, Bulgaria is not yet there in the fact book, but you will be. You will be in the next version in 2025. So I would like to share with you some findings with respect to sustainability. Again, nobody has ever seen this yet. You are the first privileged audience to see these findings. So please do not yet share them publicly. This is really just to bring to you some very fresh observations on this very important topic. So again, this covers 49 jurisdictions around the world. And we can see that all of the jurisdictions have established specific requirements or recommendations with respect to sustainability-related disclosure. So there's a lot on this. You'll see there's a few slides on this topic. There's various aspects to this. So as shown in this figure, a requirement by the law or regulations has been established in 2/3 of the surveyed jurisdictions, while listing rule requirement has been implemented in 8% of the jurisdictions. In 24% of the jurisdictions, sustainability-related disclosure is a recommendation provided by codes or principles, including frameworks set by the regulator or stock exchange with a comply or explain approach. In terms of the applicability of such requirements or recommendations, sustainability information must or is recommended to be disclosed by listed companies in 26 jurisdictions, while in the remaining 23, such disclosure frameworks cover both listed and non-listed companies. So as a result of the existing sustainability-related disclosure requirements and recommendations, along with the growing consideration investors are devoting to this sustainability-related information, almost 8,000 companies listed in 73 markets globally disclose sustainability information for their performance in 2021. These companies represent 84% of global market capitalization, ranging from 66% in China, where sustainability-related disclosure is only recommended. So 95% in Europe, no surprise there. Notwithstanding, these companies represent only 19% of the group of 42,000 listed companies globally. So it's progress, but we still have a long way to go. This difference between market capitalization number of company ratios may be explained by the fact that 30 of the surveyed jurisdictions allow flexibility for smaller listed companies not to disclose sustainability-related information. Moreover, in the 13 jurisdictions that only recommend the disclosure of sustainability-related information, large listed companies may be more responsive to institutional investor demand for such information. So I look forward to hearing from the panel about how this is working here. Oops, what did I do? Okay. But yeah, remember I was talking about metrics. So here we are again, looking at this topic now in more depth. So in addition to recommending disclosure, the principles also have a recommendation that if a company publicly sets a sustainability-related goal or target, the disclosure framework should provide reliable metrics so that you can easily access this information. Such a policy is important to allow investors to assess the credibility and progress achieved. 53% of the survey jurisdictions already require or recommend the disclosure of metrics for sustainability-related goals. In 16 jurisdictions, a requirement by law or regulation was established, while in 2 of them, the requirement was implemented by the listing rules. In 8 jurisdictions, the disclosure of such metrics is recommended in codes or principles. One of the most relevant sustainability-related metrics, also no surprise there, by market capitalization, is the greenhouse gas emissions. And here we can see that more than 5,000 listed companies, totaling 72% of global market capitalization, publicly disclosed their 2021 greenhouse gas emissions, resulting directly from their activities and indirect emissions related to their energy consumption. And 3,300 companies disclose the emissions generated in their supply chains. So this is part of the scope 3 of the emissions. So also we see that companies are complementing these performance measures with the disclosure of greenhouse gas emissions reduction targets. With the exception of companies in China, at least 40% of the companies by market capitalization in the rest of the regions covered disclose their targets, with relatively higher shares in Europe, the United States, and Japan. Now looking at the issue of assurance, which I mentioned earlier, investor confidence in the sustainability-related information could be strengthened when the information is reviewed by an independent third party. I hope there are some auditors here in the room. This is why the principles recommend that the phasing in of requirements should be considered for annual assurance attestations by an independent, competent, and qualified service provider. In 2022, almost 2,700 companies that account for half of the global market capitalization hired an independent third party for the assurance of their 2021 sustainability-related reports. Europe presents a higher share, with companies representing 77% of the region's market capitalization providing assurance of sustainability information. In addition to assurance, the consistency, again, comparability, and reliability of sustainability-related information can be reinforced if it follows high-quality, understandable, enforceable, internationally recognized standards. So we see that out of the 49 jurisdictions covered, 5 require or recommend the use of international disclosure standards. 11 have opted to require or recommend a local one, and the remaining jurisdictions allow companies to choose. Currently, listed companies often disclose a full or partial alignment to one or more international reporting standards. Here we see the different ones: GRI standards, TCFD recommendations, or SASB standards were used by companies representing an average of 42% of global market capitalization in their 2021 disclosures. The CDP questionnaires were used by 55% of listed companies by market capitalization globally. However, regional variations in the use of standards are relevant. So here you can see TCFD's recommendations were prominent in most regions, and SASB recommendations were less used in some of the Asian countries. Now, moving to the board, again, a very critical player in all of this. The principles recommend that the corporate governance framework should ensure that boards adequately consider material sustainability risks and opportunities when fulfilling their functions. In half of the survey jurisdictions, boards are explicitly required or recommended to approve policies on sustainability-related matters, such as sustainability plans and targets, as well as internal control policies and management of sustainability risks. So, for example, it is a legal or regulatory requirement in 8 countries. Listing rules establish requirements in 3 of the countries, and boards are recommended to approve sustainability risks in 13 countries. So it's kind of spread more or less evenly throughout those different approaches. In the other half of the survey jurisdictions, there's no explicit requirement on board responsibilities, but depending on the materiality of the sustainability matter, broad director duties may apply. So this is an example in Australia and Norway. So you can see that countries are taking different approaches depending on where they're coming from and their legal regulatory frameworks, history of corporate governance, and markets developments. Boards may establish or expand the role of an existing committee to support the board's role in monitoring and guiding sustainability-related governance practices, disclosure strategy, risk management, and internal control systems. Globally, companies represent half of the total market capitalization, have in place a board committee responsible for sustainability. You can see that in the the first panel there. The United States, 65% of market capitalization, others 55%, and Asia, excluding China and Japan, 54%, represent shares above the global average, while a committee with such responsibilities is less common in China and Japan. Likewise, boards may use sustainability-related metrics when determining executive remuneration or nomination policies. So this will be very interesting to follow in the next few years to see how this changes. In Europe and other advanced economies, 75% of companies by market capitalization associate their executive compensation to sustainability matters, while in the United States and others, the average is at 55%. In the remaining regions, these shares are varied between China 5% and Latin America 27%. So that sums it up for now, and you will be able to access all of this publicly. I mean, the principles are actually already, the recommendation, the OECD recommendation on the G20 OECD principles is already available online. The fact book, like I said, will be launched in September. So I would just like to conclude with a few words to come back to Bulgaria after this big global picture. So until recently, actually, the OECD has not worked very closely with Bulgaria on corporate governance of listed companies. As many of you know, we have done a lot of work with Bulgaria on state-owned enterprises, as the Minister of Energy mentioned. But not yet on corporate governance of listed companies. And this is now changing. So this is why I'm here. And this is due to the OECD's invitation to Bulgaria to start the process of accession. So I have the honor to be managing this review, which will assess Bulgaria's willingness and ability to implement the OECD's recommendations in the area of corporate governance. This means that the OECD Secretariat, so myself and my colleagues, will be working closely with the Bulgarian government and in consultation with the relevant private sector stakeholders to review Bulgaria's implementation of the revised G20 OECD principles and the guidelines on corporate governance of state-owned enterprises, and a third new instrument, the anti-corruption and integrity guidelines for state-owned enterprises. So the topic of this conference on corporate governance and decarbonization transformation is very timely. As OECD and Bulgaria, we embark together on this intense process to ensure that Bulgaria is effectively implementing the principles recommendation, including the new chapter on sustainability and resilience. So very exciting time, and thank you again for the invitation, and I really look forward to the discussion today. Thank you.
Thank you, Fiona. It was a pleasure for us to have you as a keynote speaker. So for you also the gift from our partners. I forgot to tell you the name of the company which produce this chocolate, Ice Open, the chocolate house Stanimira. Stanimira is here. It is pleasure for us to have such gifts for our speakers.
Thank you so much.
Thank you. So the first panel today, for me, is extremely important, not because I'm a lawyer in my background, but also the regulatory landscape is very important for all of us, compliance as well. So we have 4 ladies as panelists, each of them are high-level experts and leaders. So let me invite to the stage our panelist and our moderator. Our moderator is Lilia Guranova, CNext Insight and CNews, our long-term media partner for the last 5 years. Florence Bindel, Secretary General of European Issuers, working very close with ESMA, with EFRAC, and with the European Commission. Evgenia Kuchukova-Truanska, HDI Europe and Bulgarian Industrial Capital Association. Evgenia is also member of EFRAC advisory panel on the connectivity between financial reporting and and sustainability reporting, and Neda Mujo, head of supervision of the public companies and issuers, Financial Supervision Commission.
Yes. Can everyone hear me well? I think so, yes. Well, good morning. Very happy for us four to be actually opening the discussion part of this event. And looking at our panel, I'm really happy that diversity is really turning into the sort of female empowerment perspective these days, with us having four ladies here on the stage. I suggest that we start with a short introduction of the organizations that we're representing. So, Ms. Mujo, if you would like to start, please.
Okay, do you hear me well? Okay. My name is Neda Mujo. I am head of public companies, issuers and special purpose investment companies at the Financial Supervision Commission here in Bulgaria. Such an honor for me. I am a PhD, and I will reveal a secret a personal secret. I graduated last year as PhD from a joint PhD from a university here in Bulgaria and in Belgium. And the peculiar thing is that when I started the PhD was that I was doing a PhD in sustainable development and in the renewable energy business models. And when everybody was asking me, why are you doing this thing? And I was like, I'm going to be retired in 2065. I need something with future. So basically, I believe that the gatherings here and what are we going to be discussing today and what I've invested so far, more than a decade now, in the banking and non-banking financial supervision. I am, since 2014, part of the Financial Supervision Commission. I've been working now in the Supervision Directorate, Investment now, and Capital Markets. And I believe that this is a strong professional background to, let's say, invest and give more to what we need to challenge from now on.
Thank you. Thank you. Ms. Mendel?
Good morning, everyone, and thank you very much for this very nice invitation to come to participate in this event. So my name is Florence Mendel. I'm the Secretary General of European Issuers. I don't think there is a lot to say about my own background, I would say. I have experience in different fields, but the reason I'm here today is to present the views of the issuers. We are located in Brussels. We are advocating to defend the views of all the issuers in Europe to the institution. And as you guess, since the Green Deal, particularly active now in the sustainable path for our corporates and also for Europe and for the future of the planet and the citizens. So thank you again for inviting us here.
Mr. Anska?
Good morning, everyone. And I also would like to thank Daniela for inviting me to this event. So I come from an audit background, so to Fiana's question, there are auditors in the room. I spent the last 20 years mainly in auditing. 10 out of those 20 years were spent in Africa, where I was a partner in Deloitte Africa, and I was also a member of technical and professional development committees of some of their audit and accounting regulators. Since I came back to Bulgaria and Europe last year, I've been mainly focused on my work in respect of the sustainability reporting standards. I've been assisting the Bulgarian Industrial Capital Association, HGI Europe, and also ESC in providing opinion papers on the draft CSRD, ESRS, so that's my main focus at the moment. And I guess that's why I was invited to be here and say a little bit more about our opinion. We also had discussions with the Bulgarian certified public accountants around the coming assurance standards. So it was also something that was already presented by the previous speaker, but we can give a little bit more information about this as well. Thank you.
Right. And so who am I? My name is Lilia Goranova. I come from CNext. Probably you know us more broadly as C News, which is a website that covers business stories for Southeast Europe. However, we rebranded last year to reflect the fact that we have been actually providing business intelligence and research on demand services as well for quite a lot of time now. I'm head of the Business Intelligence Insights team. We published a few months ago a report on the ESG policies in Bulgaria, trying to sort of assess the sustainability component of the Bulgarian economy versus the European taxonomy. And this is why I'm here today, sort of being able to look at a broader perspective of the topic of sustainability, decarbonization, but also sort of being a newbie when it comes to regulations. So I'm very happy that I have these three ladies with me on the stage to educate me on the matter. And I would like to open the panel with a question to Ms. Mujo. Actually, can you tell us what is your opinion on how companies can improve their expertise in the boards, and also when it comes to their corporate structure in terms of covering and complying with sustainability requirements, but also sort of turning them into a competitive advantage?
Right. Well, of course, I believe that we are gathered here because the elephant in the room is the ESG. And of course, Bulgaria has to, let's say, move forward. We know that we move forward when we work on the competitiveness. This is the one thing that, as Ms. Fiona said, that we are moving forward and we're measuring something that helps us move forward. Basically, ESG reports will be part of the company's annual financial statements. So most importantly, what we need to know from now on is that CSDR, SFDR, the unfair market regulation, and also the EU taxonomy are going to be our best friends from now on in the business practice. And from our part, from the part of the Financial Supervision Commission, and as well as looking to the best practices in the EU. By the way, 2 days ago, the German regulator published on their website the Sustainable Investment Strategy. It is in German, and I believe many of people here speak the language. And the key recommendation that the regulator gives to the, let's say, to the companies and the listed companies especially, and issuers, is that you better find people who are very well, let's say, on the track. And concerning the board of directors, those are the people who are going to set the standards for, let's say, as I mentioned in my personal previous example, who are going to set the standards for how the business and the companies which are listed are going to improve and, let's say, present the business model. So I believe that this is a key strategic point that is very important to be set out in this discussion. And basically, I will go later on through the numbers, what we have in the Financial Supervision Commission. And of course, make no mistake, we are here. And when you speak to very clever people, it's very important you set the standard and you understand that there's no lie in the middle. We need to make sure that we make our homework. And of course, the regulator is going to be strictly, let's say, complying with what I mentioned previously, with the 4, let's say, standards. And besides what was said before about the SF reports since 2021, we're not going to require anything else besides what is being already required by the EU policymakers. And of course, this is the, let's say, the moment when we need to take the lead. And of course, talking about these things, we have already in place the revised OECD principles, and I believe that this is a very important thing to, let's say, set the standard and also strengthen the competitive advantage that the Bulgarian companies, especially the listed ones, could have while we are going and approaching this, let's say, methodology with other 50,000 companies that are going to be setting the standards since 2024, and they have to, let's say, meet the CSDR requirements about the ESG. And of course, this is something that, of course, people who, let's say, do not work and do not do business in Bulgaria, let's say, the framework is different in different countries. But what is common is that in the capital markets, you build one thing, and that is trust. If you do not trust, then you do not come to make business in Bulgaria. And especially for the listed companies, this is a very important and peculiar thing for each and every country. The OECD members, the last joint members, Costa Rica and Colombia as well, we've seen the handbooks. And of course, it is very important that the members of the board in each company, as well as the regulators, of course, it's very important that they make a decision, but they could be held accountable for each and every decision they make. So there is, I will conclude with this, this question. There is an old 9-dot test, IQ test, and you have to gather the lines with 5 lines. Of course you can do it with 5 lines. Everybody can do it. You have to do it with 4 lines. With 4 lines, you can do it if you go out of the box. And of course, now that we have seen how other countries are doing it, we are in a moment that we have learned the lessons. And of course, we can do it in a more efficient way.
So complying actually builds trust, and there you have it. This is your competitiveness, so to speak. Ms. Bindel, we just mentioned the EU taxonomy, and 2023 was sort of a milestone year. So a lot of large companies that have employees over 500 people had to start their reporting process under the EU taxonomy. And this year, the reports covered only the eligibility and accountability KPIs for 2 of the principles of the taxonomy, climate change mitigation and climate change adaptation. What do you think would happen once we add the other 4 to the reporting template? Would there be challenges? What would they be?
Yes, thank you. First, I would like to reassure a little bit the business here, in the sense that there is this transition path, moving forward. But it's important to understand what should be done, when, and how. And I think it's really now the challenge is actually to have this common understanding on the methodologies, but also with the regulators, but also with the business, so that we speak the common language. Coming to the taxonomy, the framework should be an operable tool which allows for comparability of information in order to finance the transition. For the moment, we see here and there some loopholes in the sense that, for instance, when you see some of the outcomes of the reporting alignment of activities by companies, sometimes you have, some have very good criteria, others don't, and there is not actually this objective goal of, proper comparability. So for our perspective, for instance, the do not significantly harm principal criteria represent the minimum performance and should not be considered as the best in-class criteria. When it comes to also the transition plans, in order to reorient the capital flows to sustainable activities, they should be quite flexible, but they should take into consideration also the maturity of the different topics and also of the environmental objective. So that's a little bit this challenge of, having this, flexible approach, while at the same time having this, common understanding of the direction of travel. So for the moment, the taxonomy is quite a complex tool. I mean, let's be honest. I mean, and probably it doesn't, address already all the challenges to finance the transition. So we actually think that a phasing approach to allow sufficient time for companies with the 4 remaining objectives should be done, in order to have the first reporting in 2025, but the others, be done on a voluntary basis probably, so that it gives a little bit of leeway, to both, all the market participants in this journey. Then this, I mentioned already, this issue of the transition. How is it really reflected and should be probably better addressed? One of the points also that we streamlined in this disclosure requirement is the OPEX KPI. I mean, we have discussions already with the investors, and we don't think it shouldn't be mandatory, and that non-eligible activity should not be actually reported in that sense. For the moment, not many sectors are not encompassed in the taxonomy, which led companies to be not eligible for the time being and having to report activities that do not significant to the core of their business. So predictability is important. They should be key to mitigate the mismatch between the legislative framework and the reality, because this is what we see on the ground. And last but not least, for the moment, all those discussions are taking place in the platform for sustainable finance. And we think that in this context, there should be much more companies involved in order to support the developments of this whole framework.
So you mentioned that the taxonomy is sort of a complex tool. And there is no lie to it. As well as someone who tried to sort of analyze it, I can vouch for this as well. But just to add a bit more to the complexity of our lives, there is currently a draft delegated act on new European sustainability reporting standards. The public consultation process, actually, the deadline is expiring today. And both the Bulgarian Industrial Capital Association and European insurers, I think, all issued their opinion papers on this delegate act. Mr. Ranska, can you shed some light on your position on these new standards on the horizon with us?
Yes. Thank you so much. The standards are actually not very new by now, because the first consultation process took place last year. But just before I focus more on our opinion paper, just a personal comment. I think nowadays we are a bit fixated on the reporting aspect of sustainability. But you can't report on something you're not doing. So we should start a little bit earlier than reporting. The companies need to realize what their role is. They need to understand what they're supposed to achieve, how they're supposed to achieve it. They need to have a plan. They need to have processes in place. They need to take action. Only then they can report, and only then their reports will be meaningful. Otherwise, we are just getting into another tick-the-box exercise, which won't help anyone. So that was just on my personal comment. Then now to focus on the opinion paper. So this opinion now, this consultation process was on the reworked draft of the ESRS. In November last year, EFRAG issued their proposal for the standards. And since then, the European Commission did some extensive work. They made some changes. So now they published the EU proposed draft with the CSRD. And that's the one we were commenting on. So the first starting point for us was to look at the changes from November to now between the different standard drafts. And in our opinion, we actually commended the Commission on the changes they made, because the changes, the overall direction of the changes was towards reducing a bit the administrative burden and also trying to assist the preparers of the information with the initial adoption of the standards. So what the Commission did, they extended the scope of materiality. So now only the more generic ESRS 1 and 2 are mandatory, while the other ones are subject to a materiality assessment, which means the companies will only report on E or S or G information when it's material for their operations, while previously it was not the case. There were some more extensive mandatory disclosures required by all companies. Then the Commission also has the phasing in approach. And if you read the standards, it's quite a big read, but if you just scan through the standards, you'll see that companies or organizations will be exempted from reporting certain metrics or certain information in the first and in the second year of application of the standards. And then more voluntary disclosures were allowed by the Commission. So that's how we analyzed those were some of the major changes compared to the previous draft. And then what we decided to do in our opinion paper was, rather than getting into more technical comments on the standards, we decided to look to the future and say, what are the critical projects we believe need to be the main focus of EFRAG, the Commission, and standard setters in general, because you can see nowadays there are different standard setters and they're working together, and that should be the case. So our first focus area is both I'm representing the Bulgarian Industrial Capital Association, but also SGI Europe here, so I'm speaking on behalf of both, is the focus on SMEs. It's much more challenging for smaller and medium-sized entities to perform their reporting and disclosure requirements or to comply. And there was an interesting fact, I was not aware of that, but 99% of all non-financial enterprises in EU, non-financial, are SMEs. So obviously we are looking at two different populations here. One would be the listed and the other one, the so-called micro SMEs. And that project, the focusing on SMEs, is a priority area for EFRAG and the European Commission at the moment. So the listed SMEs draft sustainability reporting standard is now in draft. So there will be a consultation process. And those listed SMEs are covered by the requirements of the CSRD. The population we're looking at with interest and some concern is the micro SMEs, because they're not part of the regulation. And initially, there was no plans for such a standard for them, because they're not required to report. But what happens in practice is you're a micro SME, and then you're part of a value chain. You will be required to report, maybe not to a regulator, but to your customers along the value chain, or if you go and apply for financing, the bank or the financial institution or investor will require for you to report on certain aspects so that they can fulfill their own reporting requirements. So the recommendation was that there is a voluntary reporting standard for micro SMEs that will limit the extent of the information they will be required to report. And that will really assist. And then the information will be consistent. And then the value chain players or the investors won't be acting differently towards different micro SMEs. And there will be fair play, you know, for the SMEs. So that's a very significant project. Then continuing benchmarking and interoperability with other standard setters will be critical, and those are ISSB, GRI. You know, now very soon the sector-specific standards will start being developed. So those will be again part of ESREs. And we believe the development of those standards should be in cooperation with GRI, for example, because they already have sector-specific standards. And if we look at the big corporations or groups, many of them will end up being required to report under more than one framework. So if those frameworks are competing or not consistent with each other, it will be extremely difficult. So that work should continue. There should be a detailed gap analysis between, because at the time being, maybe between the ESRS and the ISSB standards. So we're encouraging the publication of this gap analysis, which will facilitate the adoption of the standards. Then there is the project of connectivity between financial and non-financial information, and I guess we'll touch on it a bit later, so I'm not going to spend much time at the moment. And then we come to assurance, and I completely agree that to achieve reliability and trust in the sustainability reports, there must be independent assurance. So only last week, the IAASB just approved the draft sustainability assurance standard. It was announced last week, I believe. And there will be now a public consultation ending in December this year. So that's also in development. And many assurance providers, and actually we had a nice conversation with the Bulgarian Institute of Chartered Public Accountants. So most of the parties believe that there should be some kind of guidelines to the procedures to be performed when initially the initial assurance engagements take place. And then maybe the last point, what will be very critical, at least in the first couple of years, was that EFRAG and the Commission work together and issue very detailed illustrative examples and application guidelines for the ESRS. So if you are a preparer of financial statements, you know how detailed the illustrative examples are in the IFRS standards. So we believe there must be similar guidance, similar examples as far as the ESRS standards are concerned. And then last point, more guidelines on materiality assessment. Because it's good now that the standards are subject to materiality assessment, but how do different organizations perform this materiality assessment in a consistent manner? So there shouldn't be too much room for interpretation, because then we again end up with not equal requirements for different organizations. Thank you.
Well, it certainly is encouraging that the Commission heard you the first time around and implemented some of the suggestions you had already in this draft regulation. Hopefully, they will hear you again and continue on their dialogue, the dialogue on their side. Ms. Bendel, where does the European insurer stand with regard to the new draft Delegate Act?
Thank you. European Insurance has been very much involved as we have been participating in the board, in the sustainability board of EFRAG. So despite the fact that we have approved the first set of standards provided to the Commission, now we still have some comments that some of them being, by the way, aligned with what has already been said. So we think it's important to have this standardization as a important step to transition to the green finance. We also, welcome overall this Ursula von der Leyen announcement of reducing the reporting obligation for companies by 25%, and then I would like to combine it also with this sustainability reporting exercise. When it comes to the main points that we welcome, first, this additional phasing, it's something that we have asked. Companies, they need first to assess the framework, and they need to know what to do, and then they need to retrieve the data and the information, because otherwise it will not work. And we also welcome the fact that the materiality is at the core of the assessment of the impact, risk, and opportunities for the corporates. We don't see how it could be the other way around, and this is something very key from our side. That being said, and it was mentioned, there is still lack of clarity on how to apply the double materiality concept, because it's not about financial materiality, it's also about impact, risk, and opportunity. And then to consolidate it with a proper way, there is currently actually no common use methodologies in this concept, in these respects. And therefore, for companies and to avoid inconsistency, guidance will be welcome. And EFRAG is working on that, and there should be application guidance provided by end of this month. Then, when it comes to the interoperability, first the alignment with SFDR was mentioned, but also the banking reporting requirements and all the financial market participants. It's very good to have this materiality principle applied to all the standard disclosures. Nevertheless, there is currently a situation where financial market participants, they are required to report a certain principal adverse impact indicators, which are for them and mandatory. So the challenge is how do you reconcile actually materiality assessment from the perspective of the corporate wise, on the other side, you have no materiality assessment from the side of the financial market participants. And here, I think we hope that we'll find a solution to, that would not prevent the financial market participant to report on their own obligation, while at the same time taking into consideration the absence of materiality when it comes to some of their principal adverse indicators that they should report. When it comes to the alignment with the IFRS S1 and the financial materiality definition, here again, we want to have alignment, but we are not talking about the same thing, because if you look at the financial materiality from the perspective of the IFRS S1, they look at the investor's perspective and the reporting towards, the investors and the financial institution to finance the transition. Whilst we look at the perspective not only on the investor, but also a certain range of stakeholders. And therefore, if you apply your outcome of your financial materiality assessment, you will not have similar comparability. So here again, there should be, discussions in order to have a materiality approach for European corporates that could be applied, in a consistent way, so that they don't have to go through different processes in place. Coming to some more specific, I would say, comments on the ESRS, we still think sometimes that the level of granularity is very long. Going country by country, and also raises the issue of the confidentiality of some of the information. That there is a possibility for companies in the ESRS to omit information. There is also this confidentiality aspect. I think it's very important to have the right balance here, because we spoke about competitiveness. So make sure that the calibration is at the right level. In terms of the value chain scope, it's important indeed to have this reporting for the value chain, and also you mentioned indeed the customer. But what happens when you have no influence and no direct power on your tier 3, 4? So here we think there is a limitation right now, a phasing approach, etc. But what happens after? Even if you cannot have the information or the topic. In some cases, we see the scope of reporting which is not completely in definition-wise, aligned with the consolidated financial statements. So something to look at. There is a phasing also for companies above 750 employees for some disclosure. Nevertheless, they should report about the policies, target actions. We think that this should be deleted, and it doesn't make sense because it's not really coherent with this reduction. Also, on the forward-looking information, it depends also on a lot of uncertainties on behalf of the companies. They don't have sometimes control, and they could be necessarily subject to errors. And here it could create also risk for litigation or liability if it turns to be inaccurate. And in some cases, could also raise confidentiality issues. So it's important, for us to have a kind of mitigation. I'm not going to go to all the comments on this. I invite you to go on our website. If you want to have all, the specifics. But overall, what we try to do in the comments that we have is try to calibrate it, the right level for the corporates in order, to fulfill their requirements, but also to make sure that the companies, from a competitiveness perspective and also for the transition, provide the information that is necessary in this respect.
So still quite a lot of work to be done on this delegate act, from what I'm hearing from both of you, in order for companies to actually have their, not only their reporting requirements, new reporting requirements, but also their needs to be met in order for them to actually be competitive. Mr. Anska, you mentioned something that I want to sort of grab on to have a bridge to my next question, that frameworks, reporting frameworks shouldn't be clashing. And we have financial reporting, we have sustainability reporting. Can those two actually work together? Can there be a sort of a holistic approach to all these types of frameworks in terms of reporting?
There needs to be.
Okay.
So, but can they? I think they can. And this connectivity project is on the agenda for both EFRAG, respectively the Commission, and ISSB as the main standard setting bodies we are looking at. But there is a lot of still uncertainty around how deep they need to go in that connectivity project. So in April this year, there was an International Forum of Accounting Standard Setters conference, and that was one of the opening topics was the project on connectivity. So that involved all kinds of standard setters. And what actually they said was, or their conclusion was that it's by no means clear what different parties mean when they talk about connectivity. So even starting from the definition. And then they went a bit further, and for example, ISSB now has identified 3 strategic pillars of connectivity. One will be the connectivity in processes within the standard setting bodies themselves, because I'm not sure whether you know, but for example, EFRAG has Financial Reporting Board and Sustainability Reporting Board. So they need to work together and come up with common terminology, common requirements in order to avoid duplication of effort when reporting entities prepare the information. It's the same for ISSB. ISSB is the Sustainability Board and IASB is the Financial Reporting. So they also need to work together. Then the connectivity in product is how they call it, sharing the same concepts, same requirements between the financial and sustainability reporting standards. Or directly incorporating or cross-incorporating requirements between the 2 sets of standards. And then the one that is of most interest, I guess, to the preparers of the information will be the connectivity in reports. And now the big question here was, how far do we go with this connectivity? Is it simply connecting the information between financial reports and sustainability reports? Do we go towards full integration and then having one corporate report that will incorporate both? Will they be subject to the same level of assurance? So there's a lot to consider when we talk about connectivity. And one of the big challenges and why it can't be achieved too quickly is the maturity of the standard setters. If you think about IASB, for example, they've been operating for 50 years. The ISSB was only established in 2021. Obviously, there is a lot of information exchange, and the ISSB members are extremely experienced in what they're doing, but there must be some time. We just need to take time to achieve that full connectivity, if there is such. And then also, the focus needs to be on the need of the users of the reports. The users could be investors, could be analysts, could be governments, you know, there are various users. What are they looking for? While in the past, the users and specifically investors were more focused on financial metrics, financial ratios, purely financial information. Now they need more, and they're looking for more. They're looking for what are the long-term plans of this company? Can it operate sustainably? Is it resilient enough? The focus at the moment tends to be more towards the E of the ESG, but I'm sure the S and the G are not less important. And investors indicate, or users in more generally, users of reports indicate that they need more, and they need that coherent, consistent information in a user-friendly manner without internal contradictions in it. So that's the whole purpose behind the connectivity project. And maybe just to make it more practical, just an example. For example, if a company reports in its sustainability report this year that in 3 years' time they are planning to achieve net zero emissions, just an example. You can immediately predict what will happen in the financial report in the next 3 years. Maybe you'll see a big fixed asset replacement in the asset base of the company. Maybe there will be liabilities which were not there before, new types of expenditure. So those reports are already inherently connected, Now it comes to the form and it comes to the reporting requirements.
Okay, I think we've spent a lot of time on the European level. Let's go back to the national level. Ms. Mujo, you already mentioned that the regulator would not be requiring from companies more than the European authorities already are requiring. But can you give us a bit more detail on what's to come in the future, in the near future? I'm here. The room is very interesting in that. And if you allow me an additional question, we've spoken how companies can improve their expertise, but the regulatory environment is sort of ever changing, and I'm sure you as well have to sort of keep abreast when it comes to these changes. So if you could just give us a bit of a sneak peek, how do you do that as well?
Okay, so on this part, as I mentioned before, we will not require any more of what is being required so far by the EU regulations. Yeah, I have some good news in this section. Of course, I personally and we at the FSC with my colleagues believe that this is fair enough for the companies. As we understood, the backbone of the EU economy is the SMEs companies. And we believe that if we support the SMEs, especially here in Bulgaria, so they can adapt to this new challenging environment, basically we will achieve a lot more, because it's when you see the data sheet about big countries that have achieved so much with regards to the ESG, it's very, let's say, motivating. But when you see small countries like Bulgaria, which have this opportunity to make a fast change, to, let's say, adapt fastly, this is a very good news as well. Now, the third good news in this regard, I would say, is that the FSC is doing lots of efforts. We were the initiator, and also we are participating in a tool which is financed by the European Commission along with 6 other regulators. And we will be, let's say, part of a working group from this autumn. And this is for the sake of the public companies as well, to provide a tool for them to, let's say, enhance and make easier their path to disclosing the information related to the ESG. Now, if I may make a, let's say, the national level regulation at a glance, I'm sure all of the people here in the room are so much, let's say, aware about the Marketing Financial Instruments Act, also the Public Offerings Act, let's say, the rights that they derive for the shareholders, also the commercial law, the non-financial directive, which was imposed in 2019, as well as we are now, let's say, presenting at the FSC for 3 years now, a risk-based supervision for the public companies. And it is an honor for me because I am 3 years head of this division as well. And what I have seen is that since 2021 and now 2023, it is amazing how the landscape can change when you give the appropriate instructions to the audience. Because what we use is not just soft measures. We send them a letter saying that you need to do this and this, and of course it will change the whole way how they report to us, but also give them a call. Because you have this luxury here in Bulgaria that you have a certain amount of public companies that you can, let's say, give them instruction, the right and appropriate ones, so they can comply. This is a panel called Comply and Compete. The National Codex was accepted in 27, was later on annexed and elaborated in 2021, was published on the FSC site. There was a principle, comply or explain. So basically, if you want to compete, don't go on the explain line, because it's easier to compete in this regard. This is why I personally believe that, as well as why, while I was doing the PhD, and when you go through the building blocks of a sustainable business model, you understand that when the CSDR asks you in Article 3 and 9 about the share of their turnover that result from products or services are related to economic activities and are related to ESG, as well as the share of their capital costs and the share of their operating costs. This is not just a number, as Mr. Janska said. If you want net zero, let's say, emissions in the upcoming years, of course, there are international standards, and you will, let's say, manage to present such a, let's say, statement, financial statement. But here we are talking about a whole new philosophy. This is not just a, let's say, comply and compete session when we are telling to the listed companies, look, this is something you have to do in your financial statements, just like, let's say, a company does in Austria or in Germany. This is a whole new strategic thinking and philosophy for the next 50 or 100 years to come. And this is why I believe that, to go back to your question, we try to minimize the requirements. We try to set a standard for all the EU and as SME, let's say, companies, Bulgarian and European as well. And of course, we try to find the easiest way to provide these companies with a tool that will help them to compete along with their peers in the EU and other countries. So this is, as I said, a whole new philosophy. And if I would like to leave you with a, let's say, a message here, is that, of course, we at the FSC work in regards of, let's say, not having a lot of administrative burden, being a model regulator. Why? Because we see what other regulators do as well. As I said, BaFin published a strategy of competing on 5th of July, 2 days ago. It was presented yesterday on a meeting we have. And of course, a key, let's say, a functional requirement for the FSC is to work with other partners in Europe and other regulators and understand how they're doing it. And of course, let's say we are happy to see that most of the companies are doing very well in these very difficult and challenging times. Because people say in these times of high interests, cash is king. I would say communication is king. Because you have the ESG requirements, you have the other requirements, as my colleagues mentioned. And I believe that many of the companies, they need to adapt very fast to understand what they need to do in order so that the FSC here in Bulgaria won't be, let's say, issuing different measures so they won't be compliant to us. So transparency, communication, and of course, I would say that this is the fastest track to provide the companies with the liquidity. And this is the way how the circular economy, as the minister mentioned, works. This is a sustainable development path.
I really want to ask another question. We do have time for one more question, okay? Because yes, our panel is called Comply and Compete. And this is sort of a, let's say, a philosophical question, I think. And I already know what the answer would be, but I still want to put it on the table, and maybe you would have a discussion among yourselves after that. So are sustainable investments competitive investments in terms of return, in terms of, if we know that businesses these days are talking a lot about sustainable investments and that they are striving to do sustainable investments. Still, I would say in some parts of the world, Bulgaria not being excluded of those parts, there are still people who would say this is actually hindering the economic development. I have had a lot of discussions about the Green Deal and whether this could be an economic driver, actually. So what is your perspective? Maybe we could start with Ms. Bendel, because well, we've had discussion here and prior to us coming to the room about this, and I would like to hear all of you on that matter.
Okay, thank you. I don't think there is an easy answer to this because we are in new territories, I would say. But in general, you know, from a corporate perspective, you say a strategy has no value if it cannot be implemented. Okay, so basically that's maybe the easy answer, but it's not so easy actually because there are a lot of uncertainties. First, the regulatory framework is one thing. I mean, we heard about, you know, the importance to, I mean, to comply. Yeah, yes, of course. I mean, you know, it's important to, you know, to integrate the requirements overall. But it shouldn't be forgotten that business model we need to adapt. Companies we need to find new ways of, you know, measuring, doing their business, maybe reassess their value. It will take time. And at the end of the day, we don't want to kill innovation. We want to maintain innovation at the heart. So you have a kind of perhaps a difficult balance from the business perspective to do there, you know, between, you know, moving forward, disclosing what's at the same time, you know, not being, you know, similar to any other business because you want to be different and you want to continue to innovate and find new techniques. In terms of investments, yes, there are a lot of investments that are needed. It's massive. There are other challenges concerning also the evolution of the sustainability agenda is the need of education. I mean, we always speak about financial education, you know, in all the capital markets forum. But here it's interesting because we are not even there with financial education, that we're already talking about sustainability and the need for education it's immense, you know, not for all the actors around the shield. What's at the same time the question, you know, whether they deliver, you know, return on investment, you know, the jobs in the financial markets, you know, we know where you go, but we don't know where we go in this area, and I don't have the answer, to be honest. Another aspect is the externalities that I would, you know, take into consideration. I mean, you have to look, for instance, at, you know, all the raw materials and any articles that you read there is, will we have enough, you know, to move on? So even if you have the best, you know, case and scenario, maybe you cannot reach it just because, you know, that you don't have the resources behind in order to move forward. So there are many different elements that have to be taken into consideration. Some are, you know, under the remit of the corporates, other not. And what we should be, you know, very much careful is the appetite, and I come back to your first question, of the investors to move to this sustainability agenda. Because if they cannot, like, you know, move on with sustainable investment, and also where will our companies then, you know, looking at markets, stay in Europe, or would they maybe, you know, look at other alternatives? So I think it's a delicate balance. I don't have the answer to this, but there are many elements.
What do you think, Ms. Trojanska?
I also think it's very complicated topic. There are good news, there are bad news. I think the good news is that long gone is the time when the executives and the board members were seeing investing in sustainability as just another cost that will hit their bottom line. I think more and more of them understand the importance of investing, I mean within the organizations. I'm not talking external investors now, but just investing in your own entities, sustainability practices, trying to be resilient and, you know, be innovative and move ahead. And if we think about industries or sectors, it's much more challenging for some industries than for others. And I'll give you an example here, just coming from my African experience. The first set of GRI, but brilliant disclosures I saw were prepared by an African mining company, really good. So they were like visionaries, and they operate in one of the most challenging sectors, because being in mining, inherently are not considered sustainable, but they had put a lot of effort, a lot of strategies and plans in place, how they will, within the resources and within the opportunities they have, what they're going to do, and they were able to report on it in a meaningful way. So I think the will to do it is already a very good first step, but there is a lot of work to be done. But thinking about competitiveness, I was just looking at an analysis on, so it uses the ESG framework, and it's not all about ESG, but it was a very good way to understand why working towards achieving your ESG, make you more competitive. So if we think about the E, if you're focused on efficient use of resources, you are more disciplined. It will most probably result in better financial management, or it can spur technological innovation for your company. So eventually you could achieve better profit, you know, if we think bottom line. If you think about your S, social, keeping your employees motivated, or keeping the diversity within your organization, it's already proven that more efficiencies will be gained. Your own customers will be more engaged and happy to interact with your organization. So again, it could lead to competitiveness. And then the G, I think we are attending a corporate governance conference here. So there's no need to explain why good governance results in competitive advantage.
Okay, and let's close it with your view, Ms. Mujo, on this compete and comply.
Okay, I will use a deductive method to answer the question as well, as I did before. I graduated a major in international economic relations here in Sofia. And when the professors would ask the audience whether something was good or bad, now the economists always would answer, it depends. I don't think that you can make a comparison of a sustainable investment to a traditional investment, let's call it like this. Why? Because as Ms. Bundel and Ms. Trojanska said, first of all, financial literacy is at the core. We at the FSC, I'm representing the regulator, we have started different initiatives in terms of literacy, invest safely. And I believe that the most important thing is that you know in what you are investing. Now, let's say I am a Belgian investor or I am a French investor, no matter, and I want to invest in a public company here in Bulgaria. Well, you know that, first of all, the regulator is the FSC. You have their contact data. And you want to contact them if something doesn't function well. You know that a system works very well if you know to whom you need to turn for help, for assistance. And you know that your rights are being very well kept, no matter when. So basically, in terms of investors, it depends on what you would like to see in near, midterm, or in long term, let's say, future. If you are an investor who would like to see cash flow coming in the bank account very fast, so let's say sustainable investments are not for you. You need to be patient. Warren Buffett has said this as well. Patience is the key factor that puts, let's say, money from one pocket to another. You invest in certain public companies and you wait for them to develop. Why? Because you believe in them. You have trust in them. And you want to see how they, let's say, work on later on and elaborate what you have invested in them. This is trust. And of course, from our perspective, I would say that it is very important to know that each and every investor knows that there is a partner beside them, the regulators, to whom you could turn in every moment, each and every moment, and you could get the information you need. Of course, the companies as well. This is why we're talking about public companies. They are so important. This is ESG is all about. They are very much concerned in this whole philosophy. So if they need to compete, we need trust from the investors. And if the trust is being voted, so you will get the return. This is how I believe the system functions.
So sustainable investment is already a whole new reality, let's say.
Absolutely.
Okay, well, I think this is a good conclusion to the official part of our panel, so to speak. Let's see if we have questions, yes, from the audience. No questions in Slido. If anyone here in the room would like to actually ask a question about one of the topics we have discussed or anything else that you have in mind, or you're already sort of out of the room and with the coffee. If not, I think we can conclude this first panel.
I think.
Oh, we have a question. Okay, great.
Благодаря ви. Казвам се Станимира Георгиева, iSopan социално предприятие. Когато говорите за инвестиции в устойчиво развитие...
Само за момент. Ms. Pentel, maybe, do you have your headset with you or should we translate?
I left it there, so maybe
Okay,
you can translate.
we can translate it.
I can make the question in English.
Yeah, better.
Yeah, okay, thank you. My name is Stanimira Georgieva. I'm representing a social enterprise. Our main focus is to help people from vulnerable groups and to offer them jobs. When you talk about investment in ESG, how long do you think the investor should seek the return on investment when they focus on social enterprise? How many years or...
Are you directing the question to everyone on the panel or specifically?
Whoever wants. Well, the final words from Ms. Mojo were that the future is in sustainable investment. So, thank you.
Thank you very much for this question. I've had the possibility, in fact, to get to know the business model of social enterprises, of vulnerable groups in Belgium, in fact, social entrepreneurship. And I think that this is the most, how should I say, the most interesting, let's say, form of business because big investors go to big companies. Why? Because they would like to see the cash flow running into their accounts. While here, you need to be very much patient and understand that you need to, let's say, understand the business model is not that adaptable as the big businesses. And you need to be, let's say, a little bit more patient than the rest of the investors. And this is why this kind of investors and this social enterprises are very much, let's say, important for the society and have implemented at its core the ESG. You don't need to be, let's say, a big social enterprise listed somewhere at the stock exchanges, etc. But you understand that this is the core of your business. And those investors who would come to you to invest, they are the special ones who understand that you need patience to get the rate of return. And of course, the ESG is not only about the rate of return. It's about, we have the EBITDA, earnings before interest, tax, and amortization. Now we have people before the EBITDA, which is being appreciated in the financial statement. This is my opinion on that.
And sorry,
Ms.
just one small addition. I think the investors, so I also know a lot about social enterprises. I'm actually on a board of one, but it operates in Africa, so it's not here. The investors in these enterprises, I don't believe their main focus is on necessarily purely on financial returns. They're looking for other returns as well. That's why they would go and invest in a social enterprise. Yeah.
Do we have more questions from the room? Okay, if not, thank you all for your attention. Thank you all for the fruitful discussion and hope to see you soon.
Thank you very much, ladies. It was very useful, very informative, and very nice session. Thank you again.
Thank you very much.
So after this impressive beginning of the conference, I would like to invite you for 30 minutes break. And please be here 11:50 when we will start with our second panel discussion, Corporate Policy for Sustainable Investment. We will see the investor point of view and the issuer's point of view. in Bulgaria of one of the biggest publicly listed companies, Sopharma. Other 4 panelists are for the team of the issuers, so we have 2 teams in this panel. For the team of the issuers, Miroslav Kaszniewski, chairperson of the Polish Association of the Listed Companies. Miroslav is also a board member of European Issuers. And another panelist from the team of the issuers is Martin Kunev, Group CFO of Monbat. It is my company, which I'm running as investor relation manager more than 16 years. And for the team of the investors, we have Evelina Miltenova, chairperson of the Bulgarian Association of Supplementary Pension Security Companies, and Ivan Dimitrov, portfolio manager, UBB Asset Management Bulgaria. Please welcome on the stage.
So hello, everyone.
Hello.
Is Miroslav online?
Yes, I'm online. I can hear you.
Okay, great. Great to have you here. Thank you all for being here with us today. Thank you, Daniela, for putting the effort into getting us together. We are here to put a little bit of energy into the system so that it can move to from one state to another, because the inertia, is very strong. So ESG, we've been talking about it for a couple of years, but the system needs more energy so that it can shift to a new state. So I would like to start with a short introduction of our panelists, starting with Miroslav. Please, Miroslav, could you share a few words about you and what you focus on in your work right now?
Okay, thank you very much for inviting me to the conference. Me personally, I'm working for the Polish Association of Listed Companies for the last 15, 16 years or so, long time. Previously, I've been working for the Polish Securities and Exchange Commission, so I have a bit wider perspective than just from the point of view of issuers. I also used to be academic teacher for over 15 years, so I have also some background in research. And as far as association is concerned, obviously we associate Polish listed companies. We in fact focus on 2 pillars. One of them, these are things directly related to listing, which is all of the disclosure requirements and other requirements which are imposed on listed companies. And the other pillar is ESG. We are engaged in this topic for last 12 years or so. The first serious research we've conducted on the Polish market for year 2012. It was the research in which we've analyzed all listed companies, including regulated market and the new connect alternative market, so about 1,000 companies, and such research has been conducted for 6 years. And then we've subsequently changed into different research on more related to NFRD, to reporting resulting from NFRD. So this is in short. Thank you.
Miroslav. So let's move to the colleagues that are here with us today. Evelina, can I ask you to share a few words with us?
Do you hear me? Hello. Thank you very much for inviting me. My name is Evelina Miltenova. I'm currently chair of the Bulgarian Association of the Private Pension Companies. Let's make it shorter. These are the supplementary pension companies which manage the second and third pillar from the 3-pillar system of the Bulgarian in Bulgaria. My background is predominantly banking, finance, investments. for more than 20 years, and I pride myself to be one of the first chartered financial analysts here in Bulgaria. Overall, this is my background. I took over the management of the association, which is uniting the efforts of the 9 licensed pension companies in Bulgaria, which are currently managing close to, even surpassing now, 10 billion euros on the local market and on the international markets as well, which is really a quite substantial amount. Our main focus in the association is to improve the legislation, to protect the interests, of course, of the pension companies, but not only the pension companies and the funds, but also the investors. We communicate with the international and external and local stakeholders. This is the overall view on my background and who I represent. Basically, we are the largest institutional investor on the local market. I mean, the members of our association.
Thank you.
Thank you.
Mr. Kanev, please.
Hello, good day to everyone. It's a great pleasure to be part of this session in this conference. My name is Martin Kunev. I'm the finance director of Mombat. As Dani mentioned, one of the big cap companies on the Bulgarian Stock Exchange, a company headquartered in Bulgaria but with international presence, whose main activity is the manufacturing of car batteries, car and telecom batteries, with foreign operations with similar activities Tunisia in Northern Africa, and also recycling operations in Serbia, Romania, and Italy. A company that is on its way of transforming into this very important topic of ESG, including the E, but we all focus on the E. We know that S and G are equally important. In my previous jobs, I've been working as part of a corporate finance team for an American IT distributor, very much focusing on reporting, on consolidation activities. And years ago, I started my career with Big Four audit. So another auditor in the room, ex-auditor in the room.
Okay, good. And a few words from Ivan Dimitrov.
Sure. Hello to everyone. It's a pleasure to participate in this event. My name is Ivan Dimitrov, and I'm a portfolio manager from UBB Asset Management, which is the part of the KBC group, which is KBC Asset Management, one of the mid to large asset managers in Europe. In Bulgaria, we're number 1 or 2. In many of the markets where we operate, we are a market leader. The group is active in asset management in 6-7 countries in Europe. And we represent the investor's point of view. Otherwise, my background includes also management consulting, investment banking. This is in short about me.
Thank you. So having all these people that are sitting on both sides, let's say, of the story of ESG, some of them are generating information and trying to incorporate, especially the E parts, as Martin mentioned, in their activity, but also trying to cope with all the overwhelming requirements that are coming and changing every year. So following the first panel, I would like to first focus on this topic. How do you feel today about ESG? Do you feel that it's more we are more focused on reporting now, and it's almost no energy left to actually incorporate into the activity, or is it that we are starting to realize that we have to change what we're doing first, and then reporting will be much easier afterwards? So a few words from Martin, please, from the issuer's perspective.
Yes, sure. There was something very nicely said in the previous panel that it shouldn't be about reporting. It should be the actions before that, the true embracing of ESG. And it's certainly has started, again, being a representative of Mombot, I can mostly focus on our company, thinking about the different letters and segments of the ESG culture. I may say that it's the business environment who's really leading the companies and our company to be ESG compliant. On the environmental front, the whole industry, the battery manufacturing industry is, I think, one of the best examples of the circular economy, because in order to produce a battery, you are actually recycling an old battery. And by recycling, I mean that 95% of the content of an old battery, a used battery, which is trash, effectively, it's litter for the environment, but in circular economy, it's actually a new product. So there is only 5% that remains in the environment as non-recyclable trash or difficult to recycle trash, or actually it's still a good product for other industries. And then in order to be efficient, to be up to speed with the competition, again, it was the previous session was around the competition. Still, the competition is based on the financial results. So you need to be good on the market. Your revenue should be growing. Your margin should be improving or being stable. Your EBITDA in nominal terms should be growing. And in order to achieve this, actually, it requires constant investment in new manufacturing patterns, in new technologies, in new energy-saving installations, be it solar panels, be it installations as we have in our facilities for compression of gas, which is ultimately reducing the gas expenditure. We're investing in new installations for more efficient recycling, so that those 95% at some point become 97%. So we are doing all of this not because we need to report on it, because it's really the market that has made us realize that this is the path forward. And then the reporting comes second, and we very well understand it's equally important. And it's actually, the importing is a good way to demonstrate all those good activities that has been done or are being done at the moment, or has been in the pipeline for years, in the past years, and are in the pipeline for the years to come. So the reporting is a very good way to show this. But because it's a reporting, it's in a way need to be unified across companies, across industries. And here comes the challenge, to the extent that we realized now in the past 4 or 5 months, when we were actively working on our 2022 reporting, and we had to, for example, report on the taxonomy, we realized that it's actually a difficult exercise to get the data. We have the data, right? But we don't have it in the needed format. Or we thought we had the right data, then it turned out that we need to collect another data, additional data, to format the data, to interpret the data in a different manner in order to be compliant with the taxonomy reporting. At the end, we were even slightly surprised with the outcome. I believe, as many other companies, we had some external help working on the reporting in order to give us a hand in this very first year. So working together with our partners, we come to a result that is slightly surprising.
In a good way, or
in a good way, yes. But also surprising that because taxonomy, it's asking for revenues, it's asking for capital expenditure, it's asking for OPEX. But then OPEX from a management standpoint is something very different to OPEX from a regulatory European taxonomy standpoint. So it's kind of the same terms with different meaning, different content. So it also requires certain education in order to get even the users of the financial statements know what they're seeing under specific terms, which is different to what they might have been seeing until now under the same term. So
this was going to be my roundup question. Did you learn something new from your perspective? And then we would shift to hearing Mirosław's point of view, because he can tell us a little bit more about more companies on the Polish market as he's representative of their association. But did you learn something as a manager in this process? Was it useful for you?
Yes, it is useful, among other things, because it helps us have a different look on our data. Because, as I mentioned, the company, and it's probably valid for each company over the years, it has established a reporting landscape, and people in the organization are used to this landscape. And when there is a new requirement and possibly an additional group of users, potential users for those financials, it makes you reconsider the data you have, the way you present the data, which is positive. Of course, there is a negative, that doing all of this is somewhat challenging. And we're certainly probably still very low in the learning curve in being efficient and really adding the value that the investors and the other users, other stakeholders would want to see in the financial statements.
Okay, thank you for sharing this with us. And I would like to ask Mirosław, apart from commenting on the reporting landscape in Poland and all the listed companies, how they feel about reporting versus the new practices that they are including in their activities, could you tell us a little bit more? You're very involved in the process of the new standards that are about to be published soon. They are published for discussion now. We shared a few points, but could you please elaborate on that? Thank you.
Okay, thank you very much. So just I'll start with a few words on the perspective of Polish companies reporting ESG data. And I strongly agree with Martin that it's, and what, as I understand, what has been said during the first panel, is that not just about reporting. Reporting is just the last stage. It's really about ESG transformation of the company. If you are just focused on reporting, you will prepare a nice report, but that definitely is not something that will be sustainable in long term. And I would also add that the companies which are really transforming themselves, that really took this effort to look closely at ESG data over a long period of time, and then as a result of that, they prepare reports. Quite often they can use these reports not just for reporting, but for many other purposes, starting from purely managerial things, so that you know where you've got the problems in the company, but also in relation to other people, other companies, other governments, other municipalities, and so on. So imagine a situation that you are a company which really takes care about ESG factors. You have it documented, you have prepared a report, the report is audited, so the data there are true, and you are starting a new investment in a given place. And you can prove that, well, from the perspective on environment, it's not something wrong because, well, in the previous investments, there were no problems. Cows are still giving milk, hens are still giving eggs, and so on. From the perspective of social things, you can prove what have you done for local community. From the perspective of governance, you could say, well, we are paying taxes in these places. Yes, so municipality will welcome you because you bring a lot good things to a given place with your investment. So there are a lot of benefits from doing that, not just preparing a report. Now, answering the question relating to the standards which are to be prepared at Europe-wide level, well, yes, exactly today is the last day of the consultation of the latest version of ESRS's European standards for sustainability reporting. And these will be the standards which will change the landscape, because previously, in many instances, companies were rather reporting what they wanted and using the standard that they wanted, and the data were not very accurate. Now, under the ESRSs, we'll have the data which are comparable because they will be prepared under universal standard. They will be fair and accurate because they will undergo audit. They will be easily accessible because they will have to be published in machine-readable format. So all of that will change the ESG reporting landscape, and it will happen very, very soon, because the first reports will be published for year 2024 in relation to the companies which are listed, large companies listed on the exchange, these ones which are reporting now based on an NFRD directive. So, in fact, within a few months' time, from the 1st of January 2024, they will have to start collecting the data. So it's really a very, very short time for them to prepare. They have to read the latest draft, which we are commenting right now. The draft will not change substantially because it has to be officially approved and published by the end of August. And then finally last 4 months for preparing to collecting the data. First, you have to analyze in a given company what data you are supposed to report to, which are material in the case of your company, and then prepare the whole process of collecting the data. So there will be a lot of work to be done. And I would perhaps add one more thing that, well, in fact, in relation to listed companies, it's easier than in relation to non-listed, because listed companies have a lot of competences in preparing various reports. The first companies which will report under these ESRSs, these are the companies which already published their reports according to Sustainable Finance Taxonomy for 2022. So they really have a lot of knowledge on that. And 1 year later, for year 2025, also large non-listed companies will be subject to the same reporting. And for them, this will be a real problem, how to do that, because they don't have these competences, these reporting competences, which we have in listed companies. Thank you.
Thank you very much, Mirosław. I would now like us all to hear the perspective of the investors. And apart from commenting on what you encountered this year when you were reading the reports, do you really at the moment take big consideration when you're making investments of the E parts, especially because on S&G we have been reporting before in certain formats, not as wide as we do now, and not so interrelated with not so many numbers, but still you got some information before on the main companies on the market. And then could you tell us your perspective of how do you think this process will be driven? Because the idea, and we already discussed it, is that one way to drive it is through shareholders, and you are part of that group. Because when shareholders require public companies to behave in a certain way, sooner or later they will have to comply with that if they still want to be competitive on the stock markets. So that's my question to you, and maybe start with Evelina.
Yes, thank you. I will start to brief you about the situation with the pension industry and the pension funds. Actually, it's a very preliminary phase of really starting to comply with the ESG requirements. And basically, this is just the very start. As you know, as of last year, the first step was done, the introduction of the adoption of the CSDR in Bulgaria. Currently, the CSDR reporting and other requirements, actually, they affect the volunteer pension funds. At this moment, which is also a good step. Actually, the reporting is already in line by all the pension companies, actually managing above 27 funds, but in this case only 9, because only the volunteers, funds are managed and controlled by this, are reporting in line with this directive. But it should be stressed that the whole private pension industry is raising its awareness of the ESG policies, the ESG new reality. And it will further increase, of course. Currently, by the way, the ESG considerations and requirements are directly affecting the investment management of the pension funds when it comes to not only to the reporting, but it starts with, of course, with the investing, because the colleague from Mobat was saying, yes, we start with the actions before really the reporting, and we start first with the investment part, of course. And normally what has been done in the past year, that the not only in the past year, but the investment policies of the pension funds were further enhanced, expanded and elaborated in order to include the specifics of the ESG requirements. Actually, the investment policies now have a special part which is called the ESG, and the previous corporate social responsibility part, which was much more expanded, which covers exactly the way how the company how the fund will invest. So the number one thing is the application of the so-called prohibitive lists of investing in certain industries. I mean the stocks of certain industries, which is of great importance. So now the restrictive lists for the pension funds prohibit the investments in production of arms, extraction of raw materials, extraction of oil, thermal coal, whatever, which all the elements which are brown, of course, but also of course the most important part, that there is the so-called S. And the governance side is also covered, because there is clear prohibition to invest either in state bonds or any instruments, for example, of countries or companies which have serious issues, for example, with not respecting the human rights, and or, for example, they have significant problems in addressing the ESG challenges. So this part is definitely covered, but this will be further expanded and enriched at the second and the following stages, where when all the ESG directives will get more requirements, and the funds will, of course, have to adhere and to comply with, because this is really the compliance. Because the compliance, of course, as the colleague from the Financial Supervision Commission said, brings also the competition. And actually this is the very important thing, because, as we said, the competition is also very important, because the investors should also, for good or bad, but now this is for good, we should not care only about the ESG aspects, but also about the possibility really to earn sufficient return for our, in our case, for our insured persons who are customers of the pension funds, because at some point they will definitely have to receive real pension. Probably this pension throughout over these years, we should, of course, work in order to apply all these ethical standards. So we should make the pension equally ethical and also very competitive.
Okay, you raised a very important question, actually, for the short and long term effect.
Yeah, exactly.
Because you have to be profitable in the short term. You have to be profitable in the long term. And how do we all make this transition from making large investments now to be sustainable in the future, but still remaining profitable? So can we hear a little bit from you, please, on reporting and drivers for change from your perspective, and maybe share your experience, how you evaluate your investment?
Sure, I can also address that other question that you mentioned at the beginning. Regarding returns. Our studies have indicated that our responsibly investing funds do not have worse returns than our conventional funds, especially in the long term. And a number of academic studies have supported this finding of ours. I will start with a short disclaimer. First, I will use some names of our products, but this is only because I know them. Please do not accept anything as a recommendation for investment. I use them because I know them. Otherwise, the conclusions that we will reach probably will apply to the industry as a whole. What I can say is we have funds that are conventional, and there are normal funds for everybody to invest in. And then we have similar funds, but they are responsibly investing funds. And our clients can come and they can choose between the two. And they're exactly the same. The only difference is that in the responsibly investing funds, we exclude some companies that are included in the conventional funds, very similar to this. And also we have a number of other criteria that we use to select what we include in the portfolios. Basically, we are proud to say that there are 4 pillars of our policy and how we implement our responsibly investing agenda or views as an asset manager in the world. The first one is this negative screening that we do. We have a very comprehensive exclusion policy, which is listed on our website, and it lists all the industries that are excluded. For example, in a conventional fund, we do not allow any controversial weapons like cluster bombs, things that are very nasty. When we look at a responsibly investing fund, no weapons are included at all, no defense companies in there. In our conventional funds, we exclude only the dirtiest fuels, for example, thermal coal. But when we look at responsibly investing funds, no fossil fuels are included at all, even natural gas, which is considered to be relatively clean fuel. And a number of other industries are excluded. I can give you many examples, but there is no point. But that's our first starting point, and this gives us assurance that once we have done this selection properly, everything else we do from then on steps on a very solid foundation. Then the second criteria that we use is the companies that we include, or the instruments of governments, for example, government bonds that we include, they must have some kind of ESG goals or objectives included in them. It's not enough to just be a non-polluting company. You also must have something to strive to make the world better in a way. And then we we read through the financial reports of companies, and we assign scores on their ESG initiatives, and all the scores are totaled together and ranked in an order. And our funds benchmark towards something, for example, MSCI World, the World Index, because we believe the global diversification is the best for our clients. So when you look at all the companies included in the MSCI World, we start with the negative screening, and then from 8,000 companies, we drop down to 2,000. And then of these companies, we select, of these 2,000, when we do the ranking, we say, find out what the median score is. And we have, for certain funds, criteria that tells us you must include only companies that are 25% better than the average score in the investable universe. And this allows us to ensure that we include only the better half, the better companies in the portfolios. We do the same for government bonds. We have in the exclusion policy, just like previously mentioned, human rights. When the aggression in Ukraine happened, Russia was an example. When we changed the status in our portfolios, we had some Russian assets and everything was sold, government bonds and equities. Then the third criteria is also another thing that is important to us is the certain portfolios that we construct and the companies included must serve to one of the socially development goals, SDGs by United Nations. If you know them, there are 17 goals like this. We have adopted the first 15 of them. And over there, what we do is we can make an exception. That's the point where we can make an exception. If on level 1 we have excluded an oil company, for example, but then the oil company issues a green bond, which is qualified as green by the standards, the International Capital Markets Association has clear principles and guidelines that says what's a green bond, what's a social bond. So if there is such a green instrument by a bad company, because it helps the environment and helps them move in the right direction, according to us, we can use this instrument and include it in the portfolios. And then the last point, the fourth one, is we go to general shareholders meetings and we vote. We are very engaged. That's another way we see as a very powerful lever that we can use to influence companies' behavior. For example, just to give you, we have a special unit in the company which only does this, and they do proxy voting. Last year, the companies included in our portfolios, we have voted on more than almost 900 general shareholders meetings all over the world. The agenda topics that were voted were close to 10,000, and over 900 were voted against the proposal of the, like over 10% of the votes that we have cast were not pro but con some initiatives because we believed that they were against some of our principles. So these are the four pillars that we use to implement our responsibly investing.
Okay, so
policy.
You're also a driver when you go
yes,
to
we believe
shareholders
so.
meetings and you vote, regardless of your holding in the companies. You're still a driver because you're able to show the companies what you think about what they're doing.
Yes, and the sheer decision of allocating company capital towards these companies and not towards those is a signal enough to the market.
Okay, thank you very much. I'd like to move now to another important topic. What are the instruments that we all can use on both sides to actually drive this this process forward? Because we see that on the side of the issuers, we're still not so active into evaluating all of our projects in terms of sustainability. So Miroslav, can you share a few points with us, please, on that topic?
Well, if you are talking about the instruments which would perhaps encourage issuers to do more in ESG-related things, I would start with remuneration policies. And I don't know how it works in Bulgaria, but in Poland it doesn't work at all. We do have Securities Rights Directive, which requires to prepare remuneration policy and also defines what should be in such a remuneration policy for the management board and supervisory board. And one of the requirements in this directive is that there should be KPIs related to ESG factors. And for some reason in Poland, we do have remuneration policies without reference to these ESG factors. I don't know how it works because for me, it's not compliant with the directive and the regulation implementing this directive, but this is the fact. And the problem is that if you don't have something like this in your remuneration policy, it's very, very difficult really to go according to ESG goals. And it's not because you are greedy as a manager. It's not because you just want to earn more. It's because, well, you have to look what your shareholders expect from you. And the shareholders in this remuneration policy, they simply indicate what they expect from you. If they don't expect from you meeting any ESG goals, why should you do this? You are not hired to do this because if you were hired to do this, they would include it in their remuneration policy. And this is a problem. And unfortunately, the most important drivers for issuers is not coming from investors, it's not coming from shareholders, it's coming rather from value chains. And this is a very, very strong flaw, I would say, of, let's say, education and requiring a lot of effort. Many companies are undergoing I would say scrutiny. First, they have to declare what they are doing. Then they undergo some scrutiny whether they are really doing that or not. And this is really working. So if you have companies which are in the value chains of large international groups, then usually they are very familiar with all of ESG problems, and they have to follow meeting a lot of ESG goals to make sure that they will stay within the value chain. What is problematic, these are the companies which are not within the value chain, which are selling their products directly to consumers in B2C business model. And these companies, well, they don't have this alert from a large business customer. And I'm worried about them most because, at the moment, perhaps no one requires from them any ESG data, but when the final customer will ask the data on CO2 emissions or whatever, and the given company will not be able to share such data, and the other competitors will be prepared to do that, this could be a real problem with selling the products on the market. So we really need to take care of, educating the companies and indicating what kind of problems they will face if they don't meet some ESG standards within the nearest future. Thank you.
You're welcome, but could you tell us a little bit, if you know from your practice, do companies actually use methods to evaluate their future investment projects that are related to sustainability? Well, we already heard that managers do not have really the incentive for that, but sustainability really is part of investing before ESG standards came into the conversation. So I was wondering what are your observations on that?
Yeah. So there are at least two reasons for which they have to do this. First is that large companies which are reporting under NFRD directive, they have to calculate capex according to sustainable finance taxonomy. So this is something that they have to indicate. They have to publish that. And even if it's not linked to in any way to their remuneration, at least they know there is such a requirement. They know they will publish that. They know that it will be audited. So that's one reason for which in investment process they have to analyze whether it's ESG compliant or not. The second thing is that in many cases, preparing or investing in something which is more environmentally friendly is cheaper, simply speaking, mostly in relation to energy. In Poland, we've got very expensive energy, perhaps the most expensive in the whole EU. So if you invest in anything right now, you very carefully analyze and calculate what will be the energy spending for the given investment. Not only, of course, for investment as such, but later on for the production cycle once the investment is completed. So at least for these two reasons, companies have to analyze ESG factors in their investment process. Thank you.
Can we hear Wombat's perspective on these two questions, or it's actually one question?
Yes. Again, I was thinking what Miroslav is saying, to what extent a company, say Mombat, would invest in something only to put it in the proper place in the taxonomy reporting. I think still the answer is no. We would do an investment because this is the right thing for the business. As I mentioned earlier, what we realized over time and what we see more and more is that the right thing to invest in for the business is actually something that is ESG compliant. Even I was thinking for the second word, the S, where the workforce comes in place, certain investments, say improvement of working conditions, it is certainly something costly for the business. Probably it's one of those investments that are not helpful for the short-term cash flows, but these are needed for the longer-term prosperity of the business, certainly retaining the people, especially in a manufacturing industry as ours. So still it comes first with the business needs, and then the reporting is only showing the result of those actions.
But do you think that would change if, for example, the board of directors is asked by shareholders to report in terms of ESG, and that would define their remuneration, and of course they take it down into the company, for example, to also your level?
It's really a good question, and honestly difficult to answer, because I believe in Bulgaria it's probably not very much. It's very much similar to what Miroslav mentioned for Poland. It's probably a new area, and it's difficult to foresee what would be the management patterns when the ESG part becomes part of the remuneration. I personally believe it's probably a bit too early, as long as we are still in this transformation phase to really see the numbers behind ESG. We are more talking around the principles now. We all agree that it is the right thing to do, but at the end of the day, those companies, all of our companies, that needs to do the right thing for ES and G, they still need to be viable enough to stay in the business. So it's always this right mix between investment and serving the goals, and really it's the board and the top executives that needs to do those goals. So at some points, certainly there would be a link. Probably not. We are not yet there, because we still don't have the proper numbers to benchmark.
I think you mentioned one very important thing. It's what we all need to do actually, and what we all see that we need to do, is to make slowly this shift that there is some contradiction in our minds. Okay, if we go too much towards the ESG part, we probably lose profits, or we probably lose inertia in the market in what we're doing right now. It's probably too costly to do it. It's probably too much reporting related. It's too many numbers. Do we have to hire more people? Does it really make sense? And all these questions that we're asking, okay, Europe is a leader in that, but is really Europe so important? What about China? Are they really doing something about it? And so on. So this mind shift is what we are working on right now with events like that. And I want to ask you all to just share with the audience just a couple of sentences that you think each one of us should take home from what we heard so far today. And this would round up our discussion, and let's give some opportunity for people in the room and those outside to ask questions. So please, let's start with you again.
Yeah, I think at least my takeaway is that it's not a sprint; it's a marathon. This transformation, certainly requires a lot of effort. It certainly requires a lot of shift changing. It certainly requires certain investment. Me being the head of finance, I realize we need more heads and hands in finance to be compliant. It certainly requires everyone's expertise, and everyone needs to enhance its expertise. So a forum like that is a great event to really help everyone elevate their knowledge, probably share good practices, share knowledge, because I personally feel to be very, very much in the beginning of this journey.
All of us are. Miroslav, please, just one or two sentences. Thank you.
Thank you. I would say a few words perhaps about the value chain, because, usually when we talk about reporting along the value chain, many people think that it's something completely stupid, unnecessary, and so on. So I'll say first, if we want to think about ESG, in an appropriate manner, seriously, we have to report along the value chain. Otherwise, every one of us would be reporting that is very, very clean and would be buying all dirty things from the others. So reporting value chain is something necessary. Now, the second important thing about the value chain is, I'm referring to what you said, well, we do something in Europe, and what about China? So imagine that if we are reporting everything along the value chain, that means that whenever any thing comes from any service or product which is sold on the territory of the EU, has to at least disclose the data, ESG data, to the very source of that. So we can say that there's a kind of invisible border in relation to incoming products or services to the EU. And now at the level of informing about that, about reporting, and soon with implementation of due diligence directive, it will simply be forbidden to sell certain products within the EU if certain requirements are not met. So this is a kind of also protecting EU market, which I think we should have in mind. Thank you.
Thank you. Very good remarks, really. Velina?
Yes, thank you. As a summary, I would like to highlight on three specific takeaways I would like to share. It's number one is about the from the investor's point of view, which is an issue for all the investors, is about the quality of the information we have the opportunity to reach. I mean, the disclosure, we should have actually unified methodology and frameworks for disclosure of the companies of ESG related scoring information, ESG reporting risks. This is nowadays, it is really an issue, and there should be a unified approach. The second issue is about the bilateral effort together with between the issuers and the investors, so that the dialogue should be extremely intensive, because because all the investors need continuous information on the and feedback on the follow-up as a follow-up of how all these ESG targets and the projects which we have invested in, either in bonds or in equities, are actually implemented and reported, because the information is scarce at this point. And the number three aspect, which is of paramount importance for the Bulgarian market, and this is the forum I would like to raise the issue, it's about the fact that we are talking about with the colleagues, with the mutual funds, about investing in green instruments, but they are mainly international foreign instruments. And on the local market, actually, there is a clear need, with the government support, with the regulatory support, that there should be issuance of green instruments, starting with the state in terms of government bond issuance of a green bond, covered by the adequate green projects. If not the state, who else? We will need the volume, we will need the liquidity. The second is, of course, the municipality. Even the Bulgarian Development Bank is another opportunity, because they have green projects, they could securitize. We need really the instruments. This is of paramount importance. Otherwise, we will just and I'm very happy that even they are voting, but they are not voting for the local and the local management boards. Yeah, thank you.
Thank you. Thank you.
Thanks.
In short, I don't know what to say. Maybe I'll give you another example from our business. We see a very strong interest towards these products. We see customers that come, and for them, financial return is not the only thing which is important now. They care about how their money is invested and what it does in the world. So it's a powerful wave that's coming. We're playing our part in it. And if everyone plays their part, like you guys, the issuers, and we, the asset managers, one day we'll wake up in a better world.
Thank you.
Yeah.
Mm-hmm.
Okay, thank you very much. I would like to now turn to you for questions. Yes, please. There are questions in the room.
Here in the hall, there is a question. Just to finish, because Miroslav is here, if you have to Miroslav some question, he will be here 5 minutes.
Okay. No, actually, I had a question to Ivan. I mean, just following on to what Evelina mentioned about the local market. And I was wondering, Ivan, what part of your portfolio is in listed equities in Bulgaria?
Bulgarian companies. We have one fund which invests in Bulgarian equities, and 15% of this fund is invested in Bulgarian equities. It's one of the largest funds we have. Do you want an actual amount?
And what would it take to invest more here?
It's a complicated question because it's a subject
I know,
to
that's why I'm asking.
internal portfolio restrictions as well as interest. If there is more customer interest, the fund will grow. Subsequently, we would allocate more money to Bulgarian equities. At the moment, the fund is stable. Since there is a restriction, it's an internal restriction we have imposed. It stays.
It's a leading question. I mean, it has more to do with like what would it take in the capital market development of Bulgaria for you as an investor, a prominent investor, to have the trust to invest here? That's the question, really.
More liquid market, better corporate governance.
The usual stuff.
Yes, the usual stuff.
Transparency and disclosure of information.
Yes. Overall, in general, Bulgaria becoming more sexy to the investors.
Yeah, tax incentives for ESG instruments. Tax incentives.
That would be definitely
as well.
Pro.
So I will take the opportunity to thank you, Miroslav. Miroslav, are you here?
Yes, I'm still here.
Okay, thank you for your participation, because I know you have another engagement. So thank you so much for being with us.
Thank you very much. And if there are any questions, I'll ask them in writing later on.
Okay, thank you.
Thank you. Bye-bye.
Bye.
Thank you. Bye-bye.
Any other questions from the auditorium? No, in Slido, no questions. I don't know why, but no questions in Slido at all.
Oh, good for us. We said everything
Yeah.
people wanted to hear.
So I know that the only barrier between the lunch is me, so I will be shorter. So I would like to invite you for our no-meat lunch as good practices of decarbonization transformation. And the second thing which I would like to share with you is that we invited a very talented artist, Vili Kostova. She will show you her work, especially called Beautiful Nature. It is positioning next to the lunch area, so you can spend some time with the exhibition. Thank you for your attendance till now, and we have 1 hour lunch break, and we will expect you for the next third panel of our conference, which is very practically oriented, and we will speak about the corporate sustainability reporting again, but in the very practical aspect. Thank you. 1 hour break.
Thank you.
Thank you.
Thank you.
Благодаря.
after the lunch break. The next panel is practically oriented, as I already mentioned. The panelists in this panel will provide you with information how corporate boards can meet the future requirements of the sustainability reporting and disclosure of non-financial information. Also, our panelists will share information how Greek market deals with the reporting challenges. For me, it's a big pleasure to invite to the stage our partners from Greece, also sponsors of our event, Envirometrics. Here we will see Clio Platimesi, is right? Pronunciation, and Yavor Vasilev. Please welcome to the stage. So I will follow the Q&A in Slido. If any questions, I will provide you with them.
Hello.
Now it's okay? Okay.
Okay, let me just introduce ourselves. No, I don't. Can you hear me? Okay. Unfortunately, we are just two of us. We were expecting four of us to present like different aspects of environmental reporting, verification, and monitoring. But our colleagues got sick because they work a lot during the summer. We are on the seaside, that's why we are here. Okay. Okay, so all right, thanks. So just for your information, we're actually experienced reporting company and verification as well, which is dealing with industrial companies who comply with the EU emissions trading scheme. And we do it for the last 17 years already. We went through a lot of experience and issues coming from initial education, how to collect data, how to actually align all those big industrial companies to get the proper reporting for the needs of the ETS. And we are also thrilled to see how, because new, let's say, participants are entering the market, like public companies now report ESG. Later on, next year, non-public companies, non-listed companies, but above 250 people need to do this reporting as well. A year later, some exceptions will join, like companies obliged to report. And then from 2027, as projected, all the SMEs are going to report environmental footprint, etc. So it is going to be a challenge in our view, because the rules are coming quite suddenly. There is not much time to prepare for this. But as the previous panelists gave quite a good examples from the standpoint of industrial company, investor, etc. I mean, they need to set up, or all you need to set up your systems so in order to get the quality data to improve reporting. Why this is important? I mean, for ESG reporting, there is no financial penalty. It goes to return of investments or other limitations that the investors put for themselves. But in the ETS companies who need to buy emission allowances to continue to work, the accurate reporting is super crucial for their survival on the market. Okay, so I'll give the word to Cleo, who is representing the Greek Office of Environmetrics.
Thank you.
To start with, yeah.
Okay, as Javor told you, our company is specialized in climate change consulting for the last 17 years. And I'm going to talk to you about the actions that you should take in order to drive your company to a net zero transition. Okay. Let me make a brief description of the actual situation. In recent years, we have been faced with the negative consequences of climate change and, among other things, the significant disruption that it can cause to the operation of organizations. In these circumstances, proper management of the upcoming challenges will play a crucial role in the development and prosperity of businesses. Leaders of organizations will be called upon to respond to these challenges to ensure the growth and well-being of their enterprises. Okay. The serious impacts of recent crises, meaning the pandemic and the energy crisis, have made it clear that substantial efforts and strategic preparations are required to effectively address crises that threaten sustainable development. Research conducted on behalf of the World Economic Forum shows that natural disasters and extreme weather phenomena are estimated to be the second most significant risk on a global scale over the next 2 years, while the immediate following position in the ranking is occupied by the failure to adapt to climate change. Indeed, the impacts of climate change, which have been exceeded the predictions of existing planning over the recent years, provoke additional pressures. According to global megatrends, companies will face a range of risks that necessitate their engagement with environmental, social, and governance practices, what we call ESG practices, despite the human efforts and financial resources involved. These risks contain litigation risks, evolving regulations, shifting investor preferences towards sustainability, taxation and carbon pricing, high energy costs, supply chain disruptions, technology-driven adjustments, changing consumer demands, market trends favoring low-carbon products and services, and the need to reskill the workforce. While this list is not exhaustive, it emphasizes the challenges that companies must address in the coming decade. Engaging with ESG goes beyond ethical responsibility and reputation management. It provides long-term financial resilience and business continuity. Incorporating ESG into a company's strategic decision-making converts risks into opportunities and ensures the company's presence in the evolving business. Therefore, ESG engagement not only provides social responsibility, but also sustainable business growth and success. Let's now see what the transition to a net zero economy practically entails. Recent research by McKinsey estimated that the cost of this transition will amount to $275 trillion, or an average of $9.2 trillion per year until 2050. This cost will be front-loaded, increasing from 6.8% to as much as 8.8% of GDP between 2026 and 2030. It appears that the energy crisis will continue to be a concern, as according to the same research, electricity prices will continue to rise, at least in the short term. CO2 prices are expected to continue their upward trajectory in the coming years. The transition is projected to create 200 million jobs, but also lead to the loss of 155 million jobs, directly or indirectly related to climate change. The obligation and investments needed to achieve global targets are causing significant uncertainty to business activities, while physical risks continue to rise. Furthermore, there is a constantly evolving regulatory framework. This highlights the importance of the transition to a zero-emissions economy and the practical and economic implications it carries for businesses and employment. So the need for strategic adaptation and resilience is clear. Okay. For businesses to thrive in this era of uncertainty and environmental obligations, they have to undergo significant transformation to transition to a net zero future successfully. To achieve this, there are steps that need to be taken. Firstly, the support and training of both employees and managers must be a top priority. Secondly, companies need to have a clear understanding of the regulatory landscape and align their ambitious visions with net zero goals. Thirdly, keep track of evolving social expectations within their industry and adapt accordingly. Next step is to respond to investor demands for sustainability and ESG practices by integrating their expectations into the business strategies. Additionally, new technologies that further transition the companies to a net zero future should be embraced to demonstrate a willingness to invest in their adoption. Companies should be encouraged to collaborate with policymakers to drive change and create a supportive environment. Lastly, climate change considerations should be implemented in the company strategy as well, so that clear steps can be made to reduce greenhouse gas emissions in the supply chain and further increase monitoring performance. Okay. Now let's talk about the carbon footprint calculation. First things first. The most important step that a company should take is to gain a better understanding of the impact of its activities on the environment. Recognizing, measuring, and reporting emissions across the value chain is a core aspect for an effective sustainability strategy. Companies should calculate their carbon footprint in scopes 1, 2, and 3. Particularly, scope 3, although difficult to delineate, usually represents the largest percentage of emissions from business activities. There are several methods that can be used to account greenhouse gas emissions. Company can measure the overall emission result from their activities, or calculate the emissions associated with the life cycle of their product or service. Secondly, companies should prepare for the future. Having a clear and measurable target gives direction and focus. Measuring an organization's carbon footprint is essential, as this data can be used to inform and monitor greenhouse gas emissions reduction goals. These targets are necessary to accelerate the transition, as they set goals with a clear timeline, allow for the monitoring of progress and the implementation of measures to achieve the goal, increase employee awareness, and ensure that the transition to zero emissions is a priority across the entire organization. Companies should make a credible transition plan, which outlines the actions to achieve these goals by using future emission reduction pathways. This will assist you in making the best decisions for your organization. Another important factor is to remain resilient and prosperous. By assessing climate-related risks and opportunities according to different future scenarios and plan how your company will remain resilient to the inevitable impacts of climate change. Risk mitigation is the next step. Through participation in international initiatives and the use of specialized tools, businesses will be able to assess physical risk and transition risk, estimate their impacts on their operations and their financial status through various future scenarios, proceed with mitigation and adaptation actions, and disclose the information to stakeholders. Businesses can increase accountability and transparency by disclosing their climate-related information through globally recognized initiatives, such as the Science-Based Target Initiative, SBTi, the Task Force on Climate-Related Financial Disclosures, TCFD, and the Carbon Disclosure Project, CDP. By participating in these initiatives, they demonstrate their commitment to climate action and enable stakeholders to understand their strategies and progress towards achieving a sustainable net zero future. So, all things considered, addressing the risks that originate from climate change present significant opportunities for companies. Aligning their business vision and strategy with the transition to a zero-emissions future will bring enhanced reputation, the ability to address social challenges and needs, new opportunities for innovation, money-saving potentials, creation of new jobs, empowerment of staff with new skills, and attraction of investments and consumers. Thank you.
Okay, if you have any questions, just feel free to be, or we can do it in the end. Okay, thank you, Cleo. Those were like the necessary steps that in our view, every company, no matter the size or the product they do, should take. It was mentioned on the previous panel, but it's quite important, and we see it in our everyday practice, that there are lots of companies who produce or are part of the supply chain to big international companies that have already set up net zero targets. So they actually require from their suppliers to implement sustainable policy, to do the reporting. So in order for the big company to have this data and meet their goals. So it's actually not a matter just of recommendation, but in the future it is going to be a matter of market. Are you there or are you losing it? Because probably in the next 5 years, there will be no other suppliers except those who have proper environmental reporting or at least provide all the necessary data for this. And there is also something else which wasn't mentioned, but it will affect as well this, I mean, it will protect somehow the European producers. This is the so-called carbon border adjustment mechanism, which enters into force in 2026, which will be kind of a carbon tax on the border for all the raw materials that come from abroad to the European Union. So they also, in order to sell to Europe, need to have all this environmental data, pay taxes, etc. And in that sense, if we're speaking about, let's say, China, I mean, Chinese company, they do have all those necessary environmental data. They do have full EPD, carbon footprint, etc. So the rest of the world is planning to continue to comply with European climate conditions. Okay, so I'm going to talk briefly about the TCFD, the Task Force for Climate-Related Financial Disclosure. The presentation is quite long. It's for a half-a-day seminar, so I'll go briefly through it. But I would like to send to all of you, because there is quite a detailed description of our approach. Yeah. Okay, so I will be talking about navigating the risks and opportunities of the net zero transition. I'm not gonna go. Okay, so I'm not gonna go back to history. You know, what were how the climate regulation evolved. So I will skip this slide. Okay, so this is what is the transition to net zero. I mean, often it is well planned and financially backed up, but some serious social and financial challenges arise. So the trick is to find ways to turn these challenges into opportunities. But let's focus a bit more on the new financial challenge and opportunities of the transition. So actually we see the green transition as a tremendous opportunity for growth. It's actually adding to GDP probably as much as internet did in the past. So it's an area that GDP will be added tremendously, because we're taking the environmental cost of every product and evaluate it in money. So it's more of an opportunity rather than a challenge and hurdle. You know, the European Green Deal, I will just the target is to be climate neutral by 2050. There are lots of legislations adopted. I will mention the EU taxonomy regulation, the climate benchmark regulation, the sustainable finance disclosure regulation, corporate sustainability reporting directive, and also corporate sustainability due diligence directive. There is also such one. So going back to the European Green Deal, of particular interest in the industry sector is the Fit for 55 package, which is a set of proposals to revise and update EU legislation in order to achieve the goal of 55% emission reductions by 2030. Among these proposals in the revision of the existing EU emissions trading system, all big industrial companies which have installed capacity more than 20 megawatts are included in the emissions trading scheme since 2007, actually. So all those big industrial companies, they actually pay to emit, and they are financially forced as well as incentivized to do energy efficiency, to find new technology and replace the fossil fuels as well. And it's a matter of a lot of money, sometimes staying on the market or losing it. And we have seen this in Bulgaria recently. And we can actually say that those who have analyzed very well their source of environmental footprint and have clear targets, good monitoring plans, and do them, they actually perform much better in the long term. It was mentioned that the financial returns from green investments even perform higher than the indices. So it's actually proven that green thinking and implementation of green policies will benefit companies in the long term. Okay, so we actually we'll be talking a little bit about the corporate boards. So the stakeholders become more aware about sustainability matters, and investors demand for a better understanding of the impact of their investments on people and the environment. At the same time, the reporting requirements are increasing with the additional obligation of connecting financial matters with non-financial ones. Finally, the larger the business, the larger its value chain, and therefore its resilience becomes dependent on the resilience of each link in the value chain, suppliers, customers, etc. To address these above issues, companies have begun to commit to net zero targets and implement mitigation and adaptation strategies in the past few years. To assist and support companies to better align that strategy, governance, targets, and disclosures with the net zero path, several frameworks have been developed. The TCFD framework, the Task Force for Climate-Related Financial Disclosure, is one of the leading such frameworks. Okay. So TCFD stands for Task Force on Climate-Related Financial Disclosure. The initiative was established in late 2015 by the Financial Stability Board to help identify information needed by the financial sector to appropriately assess and price climate-related risks. It's an industry led that focuses its work on developing recommendations for more effective climate-related disclosures. Actually, this was adopted after the G20 finance ministers and the central bank governors put it on discussion, and then was released this TCFD framework. Okay, so the cornerstone of the TCFD recommendations is the use of forward-looking scenario analysis. Climate-related scenario analysis allows a company to develop an understanding of how the physical and transition climate-related risks and opportunities might plausibly impact the business over time, and how such vulnerabilities are or should be addressed. The TCFD framework provides useful guidance in asserting how climate-related issues affect the company's financial performance and position. Okay, the task force developed 4 widely adoptable recommendations on climate-related financial disclosures. These 4 core thematic areas are governance, strategy, risk management, metrics, and targets. Governance recommends deal with the role of management and the board's oversight of climate risks and opportunities. Strategy recommendations provide guidance on disclosing the actual and potential impacts of climate-related risks and opportunities on the company's business, strategy, and financial planning under different climate scenarios. Metrics and targets recommendations help companies choose the right metrics and targets to assess and manage relevant climate-related risks and opportunities in line with the company's strategy and risk management process. And finally, the risk assessment recommendations guide companies to integrate climate risk management into the company's overall risk management. Okay. Those are the phases. We actually developed this step-by-step approach on using this methodology for financial disclosures. And I will go through them like briefly. Done. Okay. Okay. So phase 1 is analysis of the TCFD requirements in relation to the organization's existing practices. Then the phase 2 is determination of system boundaries, like you have geographical and other boundaries. The phase 3 is evaluation and selection of climate scenarios. Then the phase 4 is climate-related risks and opportunities identification. Then the phase 5 is impact assessments and financial assessment. Phase 6 is metrics and targets. And phase 7 is formulation of proposals for climate risks and opportunities management. Okay, I will not comment on this slide, because all of these phases are explained in deep. You can check them afterwards. Okay, I will talk a little bit about this phase 4, which is climate-related risks and opportunities identification. So the analysis starts in phase 4 with climate-related risks and opportunities identification. TCFD provides an overview of different categories of climate risks and opportunities. Looking at risk, these can be either physical ones or transition ones. The first category, physical risks, result from climate change and can be event-driven. In this case, they are called acute or longer-term shifts in climate patterns, also known as chronic risks. The second category, transition risks, may entail extensive policy, legal, technology, and market changes to address mitigation and adaptation requirements related to climate change. The second category, when it comes to climate opportunities, the TCFD again identifies the categories of opportunities: resource efficiency, energy sources, products and services, markets, and resilience. Okay. Then we have the next step, which is the risk prioritization. Now we have determined our risks and opportunities related to climate change. The next step is to have a better look at the physical risks, both acute and chronic, and understand how exposed the company is to each of one of those risks. To do so, we make use of climate projections, considering a set of data in 5 categories: temperature, precipitation, wind, humidity, and sea level rise. Combining the right data will give us projections regarding various climate parameters. For example, the projection about drought in a combination of mean precipitation and days in a row without any precipitation. Okay. Then the next step is the impact assessment. This step helps us to understand the impact of both the physical and transitional risks to activities and sectors of the company. The table shown is indicative just to give you a better understanding of the diverse potential impacts of physical and transition risks on a company's activities and sector. To find the overall impact level of a given climate parameter on the company versus, we summarize the level of impact of set parameter to all activities and sectors attached. Okay. So this is the physical risk assessment. I will not dive deeper into this because we mentioned it already. Then the next step is the financial assessment. To do so, you should quantify climate-related risks and opportunities using models that integrate climate and socioeconomic data on climate-related hazards. In more simple terms, it provides modeled transition risk and physical risk analysis in financial terms. The tool allows companies to screen their portfolio of assets and to identify what risks will become material to which assets in what time frame. Methodology and outputs are fully aligned with the TCFD framework. Okay, there are 3 types of data inputs, like business data, asset type, asset ownership, asset location, asset value, GHG emissions data, scope 1, scope 2, scope 3 emissions, geographic regions. We have different data inputs. This is again like a good example of risk assessment calculations. I'll leave it here. Okay. It's also examples of how we model this. Okay, and the question would be, what is a financial impact from climate-related issues that your company might experience? And then we go to the next step, which is metrics and targets. If we pause and summarize our progress in aligning with the TCFD recommendations, up to this point, we have gone through 2 out of the 4 recommendations: governance and strategy, the latter including the impact of risks and opportunities on the company's business, strategy, and financial planning. This phase will focus on the metrics and targets recommendation. At this stage, we initially develop a list of indicators to describe the risks and opportunities identified and to facilitate monitoring, management, and stakeholder information. Such metrics can refer to environmental data like water consumption or GHG emissions, but also to transition risks like the volume of real estate, collaterals highly exposed to transition risks, identified for the company. Metrics can also refer to opportunities like revenues from products or services that support the transition in a low carbon economy. Once the metrics are defined, we review the company's existing targets and incorporate additional ones or adjust the existing ones to align with the significant risks and opportunities identified in previous phases. Such targets should align with the strategy goal and be linked to relevant metrics. Then the next phase is proposals which are formulated to the management. I mean, after getting all this data, you should initiate a proper proposal to the management. Now that we have completed disclosing the necessary information regarding metrics and targets, we look into the last pillar of the TCFD recommendation, which is the risk management. Reviewing data and results collected up to this point, we should develop proposals for additional actions to fill the gap in strategy and governance, as well as the monitoring of climate-related risks and opportunities. The end goal is one, to address systematic risks from climate change, and on the other hand, to take advantage of the opportunities arising from the transition to carbon neutrality. Okay, this is actually a scheme of what are the what are the necessary steps to have a good net zero strategy. So overall alignment of corporate disclosures with the TCFD framework can be incorporated in the net zero transition pathway of the company. So this is the net zero transition pathway. In its essence, achieving net zero is about a balance between emissions by sources and removals of gases already in the atmosphere by sinks. And this balance to be reached by mid-century, companies need to, in its essence, achieving net zero, company needs to therefore align their entire company operations with science-based targets, with deep and meaningful short-term reduction targets. Over time, they would need to adjust their business models and conditions change and opportunities arise, integrate climate-related factors into decision-making process for strategy, finance, and capital planning, among others, and consider leading action with others in their industry or ecosystem of investors, supply chains, customers, and regulators. Finally, due to the constantly evolving policy framework and technological advances, businesses need to monitor, review, and if necessary, adjust their metrics, targets, but also business model and strategic planning. Okay, that was it on the TCFD. I would be happy to answer some questions that you might have.
So Professor Boever has a question. Please, the microphone.
Thank you, Apostolos, for your presentation. Great, very informative, and also inspiring. And also showing us, everybody here, how difficult is that. To a certain degree, it's very relevant, your presentation, to the standard for disclosure of climate. People who are familiar with the EFRAG standards for the, and including for the climate, they know that certain issues you touch here in terms of scenario, in terms of risk assessments are relevant for your thing. My first question is, when you mention climate risks, you have different approaches. Cleo mentioned us the structure of World Economic Forum and latest information dated year 2023. Later on, I follow very carefully your presentation, especially in terms of risks. How a company will find information about the climate risk. Do start, okay. I have to speak louder. Let's see. I'm clear with my question. So when you talk about climate risk, let's put us in the shoes of the management of the company. How to define the risk? Shall I read the paper for the Economic Forum? Great, thank you very much, Cleo. Or shall I see something? That first. Second, concerning scenarios. I very carefully watch the diagrams, etc. At present, at my university, we're starting a new program, Climate Business. And especially, I invited people from the scientific academy to teach master students on this issue. but this is quite a small group. How a company could make this scenario?
Okay.
Excuse me, it's a pleasure to listen.
Yeah, it's a very good question.
Thank you very much. It's very informative, and for me, you are contributing, you are answering to certain questions which are on the agenda of Bulgarian people, especially relevant position. Thank you very much. Provided my questions are very tough, you could not answer.
Yes, they are.
Maybe we'll postpone our discussion. Thank you.
Okay. Thank you very much. Just to mention, my name is Javor, and I'm running the Bulgarian office of those companies. Yeah, so it's just for others to know. Okay, so Cleo is Cleo. She's from Greece originally. Okay, well, that's quite a good question. Actually, what reporting and verification companies are doing currently, they're using a big amount of tools and online data available for different regions. Actually, this is quite a hard job. It takes years to get the proper data, and we constantly actually update our tools and databases. There is not one source where you can find everything, but there are a few leading, like I'm not exactly dealing with these matters, but like the UK, the France database, DEFRA as well. I mean, I've been in contact with different guys from the Balkan regions, and some of them, and I'm helping them, we're trying to make systematic data for Bulgaria, Romania, etc. So with the development of this reporting, probably more tools and more data will be available for people. For a company, it will be pretty hard to identify those risks. I mean, it will be pretty hard to make a carbon footprint as well. At that stage, I recommend using a consultant for sure. I mean, we still, it's not promoting our business, but we still do the reporting for ETS companies that do it for 15 years, and they still prefer to hire like external consultants to be exact. And sometimes it's a matter of a lot of money savings because of the proper reporting. So if that answers your question, it will be like tough to just make a modeling on this. Yeah. Yeah.
Thank you, Javor. Any other questions?
I'm a part of a BIRT legal team, but I'm also IR director of a listed company here in Bulgaria. And I would like to ask our colleagues a practical question. Here in Bulgaria, we use mixed electricity, which is a result of green nuclear plants. Okay. And from fossils. In this situation, how we should calculate carbon print?
Okay. I cannot go that deep because I'm the manager, not the verifier. But anyway, when you're calculating this is your scope 2 emissions actually from the electricity delivered by outside sources, not electricity from your solar power plant, which is inside. So usually you take the mix of the country, they publish this data, I think, which is the emission factor of the particular 1 megawatt hour, for example. This data is published, I think, on the Bulgarian Energy Holding website. This is the same for the gas as well. I mean, I can give you exact answer to this question if you email me, and I'll send it to colleagues. But in general, I mean, the idea here is that if you have targets to use, for example, green electricity, and you're unable to buy directly from the green electricity producer, which is you buy from the grid, they sell to the grid, but this is the general mix. In order for you to prove that you're using green electricity, you might buy, for example, guarantees of origin or certificates that go with the green electricity. This is something that can help you meet your targets, even though it's not widely recognized as a green measure. I mean, most of the big companies don't include this into being green. I mean, they put in their strategy like real physical delivery from renewable sources, not just pay. If that was your question, but there is data which you can use for the emissions value of the electricity mix.
It sounds like greenwashing.
Yes, it is at some form. It might be. Yeah.
Thank you.
Any other questions? If not, thank you so much, Cleo and Javor, for your participation in our conference. Could you come here
Thank
to
you,
give
Daniela.
you the gifts from our social company, which is engaged with people with disability. So
Okay,
from the
great.
Chocolate House,
Thank you.
Stanimira.
Okay.
That's for you.
Thank you.
It is very important for the financial institutions and institutional investors to collect from the companies data with a high level quality. The next panel will provide us with information how the institutional investors, how banks, how also the financial institutions evaluate the ESG data. I would like to invite to the stage Petya Dekova, Head of Business Development. ICAP, sorry, ICAP, CRIF, Bulgaria.
Thank you.
It just will.
Good afternoon.
Just a second. May we have the presenter?
Thank you. Right. I do not have a loud voice, so please let me know if you can hear me. Well, I will be moving a little bit, but anyway. So good afternoon, ladies and gentlemen. Thank you for having me here and giving me your time and attention. Thank you, Ms. Peva, for inviting us to speak here today. I am very pleased to address this esteemed audience on a field which is one of, in my opinion, the greatest challenge of humanity today, and that is the subject matter of sustainability, or how do we keep living on in a sustainable manner in this very general and huge subject matter. I hope to contribute today by telling you a little bit more about our contribution to this very large field. Today, I represent a large multinational group, which is CRIF. I am supposed to point it in that direction, am I? And the regional part of this group, which is ICAP CRIF, where I belong to the Bulgarian side. I also represent the global network of Dun & Bradstreet. You probably have not heard of them, but they are the largest group of companies in the world and the oldest for providing information and data on businesses. Having said that, I'd like to explain why I'm here, and that is because we supply data and information on businesses. We are a rating company, so the reason we collect and organize and analyze data is to be able to give at any given moment of time for any company anywhere in the world an evaluation as objective as possible and as precise as possible on the financial health of that company. In the present time, we are required, and this is why I'm here today, to be able to give an ESG rating or score or model or evaluation for any given company anywhere at any time. Which is why we, just like everyone else, are in the task currently of collecting the relevant, sufficient and precise data which can enable us to score companies. So in the future, just like now you can see at any time a rating on a company if you come to someone like us, in the future, next to the financial rating or credit risk rating, you will be able to see an ESG rating as well. But that is in the future. I, like everyone else, I presume, will be leaving this presentation for everyone to have a look at later on. I am not here today to speak about us, but about the benefits of sustainability and about how we can help in piling up those benefits, particularly, I believe, for Bulgarian companies. Now, in Bulgaria, as far as we're aware at this stage, this topic and subject matter is very, very new. Bulgarian companies, I heard the question to the previous presenter, will have a formidably difficult task ahead of them to be able to give at any given time a reply to where they stand in terms of sustainability. I suppose we shall all be helping Bulgarian companies to achieve that task over time. The group to which I belong has a long-term commitment to sustainability. There are some details of that commitment there, which I shall not go through because you can always find them out by looking us up or even going through these slides. We belong to the, as Ms. Peva pointed out, to the finance field. We originate from there. We also mainly operate in the financial field. That is to say that capital markets, financial markets, banks, other financial institutions, stock exchanges all over the world need companies such as ourselves, which is to say rating agencies, to feed them with data and with ratings on companies. I'd like to point out that the global network of Dun & Bradstreet is a network of partners evaluating companies only, not individuals. We also do not evaluate banks and financial institutions, although they are our natural habitat. So normally, you would not expect us to give you an ESG rating, for example, because this is the topic today, on a bank. But we can certainly always tell you something about a company or a group of companies or an industry or a whole economy. Thanks to technology today, data can be organized in a much more comprehensive and easily accessible way. So data and the analysis of that data is always possible to reach, as long as you know where to reach it, which in a market such as Bulgaria is not an easy task. Much to our regret, even though we've been on this market for the past 15 years, Bulgarian companies do not have it in their daily life to look for and use external data. External data includes, obviously, the result of the analysis of that data, which, for example, is a rating. So a rating is a highly qualified opinion of an expert on the financial or other health of that company, in the future on their ESG health. It would be great if today's topic of sustainability helps to inform, to motivate Bulgarian companies to look for external data, which is definitely a very important ingredient of any good management strategy, decision-making, or daily life. I hope that this will all encourage companies, in spite of the difficulty of measuring their sustainability. And I completely agree with the colleagues who spoke previously that companies need to look for help in that area. I'm sure you're all aware of these goals. We just put them there to remind ourselves of them. Now, I would like to say something more about our contribution to the sustainability topic. As you heard, we gather data. We are not a data shop, though. We gather data with the specific purpose of analyzing it, coming to certain conclusions, and informing the subjects of our analysis, which is to say the companies on this planet. About 400 million of them there are as of today, informing them about our conclusions through our systems, our data, and our technology. In Criff and Dun & Bradstreet, we are connected via our systems to the 500 Fortune companies on the planet, so the largest, most powerful companies, because they all need data. So in sustainability, as in all other areas, we are trying and building our data lake, data pool, data set, call it whatever you like, the raw material which is necessary in order to start evaluating companies and go on to evaluate them in the future ahead. Now, I would like to present today one of the tools that are available in this market and can be used by any Bulgarian company by clicking on the site, or simply by writing the Synergy name in any browser. Synergy is the name of our platform, which we have just launched for Bulgaria in Bulgarian. It is a global platform, and I shall be speaking about it in the next slides. Now, I would welcome any questions or comments as I go. I'll pause, but you can interrupt me at any time. I don't want this to be just a piece of information. I'd really like to hear from you now or later. So please feel free. Are there any questions so far? I'm sure I've put more than one interesting point on the table, or at least foreign point on the table. All right, well, I assume that you're still digesting all that. Now, just to complete the picture, so we gather data, we put it in tools such as platforms, or we feed it directly to our customers, partners, anyone that we are related to. And then we come up with a score or a rating, or simply put, an opinion about someone in terms of mainly finance, commerce, and nowadays of ESG sustainability. Now, we always have the financial background, so I'm not an ESG officer. I would not be able to speak on what the colleagues before me spoke, which is to say that I belong to the business part of the group that I work for. However, I am a data person, and what fuels anything we do is data. I'm glad also the colleagues before me raised the issue of how do Bulgarian companies get that data? And I'd like to give you my answer to that. They don't have to find the data, they have it. It's their data. It's just that they don't know they have it. They have to understand what part of their company data they have to provide to whom in order to come up with an ESG evaluation. So they can provide the data, but probably they will not know how to use it. So the score is a machine calculated opinion, and when human work and estimation is added to the score, it becomes a rating. In Bulgaria, there isn't much of financial trade going on, so we're not used to being rated, but the rating of someone such as us can make someone very rich or bankrupt them, which is to say that our expert opinion is acknowledged by all the institutions of state on the planet. So rating companies such as ours are governed by institutions such as ESMA, which is the European Authority for Credit Rating Agencies. So our opinion, our ability to give an opinion is measured all the time by the state institutions. Therefore, it is valued and acknowledged. And it always consists of data, which is processed, analyzed, turned into a score, and then into a rating. The sustainability topic is not exactly new. It's been around for, as we saw from the colleagues before me, for more than 20 years, probably even 30. but it was somewhere in the background. It is now coming to the forefront, and it's coming to our everyday life. In future, not just companies, but individuals will be expected to account for their carbon footprint, for example. It sounds a little scary, but it's coming. Now, as I said, I want to tell you about a platform, not because it's our platform, but because I believe that it is of great benefit to Bulgarian companies to hear about it and to use it. The platform is a very simple tool for collecting ESG data from companies by companies. It is based on the classic method. Classic is a little bit of a strong word because this subject matter is new, but let's say the most common method of collecting ESG data, and that's the method of questionnaires. So simply put, the platform, which you can access any and every one of you in online with a link, you can register there. So the platform will send out invitations to anyone you wanted to send it to, anywhere on the planet. And the questionnaire will have to be filled by those companies. So they can be your customers, your suppliers, your partners, your bank, anyone, as long as they are a company and not an individual. The platform will then collect the answers to the questions that you are asking, and those questions are already there, so you don't have to invent them. Then it will score them, so it will analyze them, score them, and come up with a certificate for you. It is a certificate you can show without any hesitation anywhere in the world. It will be acknowledged, recognized, and accepted. It is another matter whether your score will be good, but at least you have the certificate. You have your questions and your answers for yourself and for anyone that you have invited. And then you will have the data which is also in those questions. This would be the simple journey of using the platform. This is what any Bulgarian company is very welcome to do, starting now. The platform is live. As we know, right now, ordinary Bulgarian companies have mostly not even heard that this is coming, that in the future they have to come up with a huge amount of new and unknown data, that they have to provide an ESG evaluation of themselves, of their supply chain. And in the case of people like banks, of their customer portfolio. So right now, since about 2 months, the Bulgarian banks are onboarding the platform, and they will be gradually inviting their customers mostly. So a lot of Bulgarian companies will hear about this because they will be getting the invitation. But the companies themselves hopefully will gradually onboard as well. This is a journey, a long-term process. It doesn't start and end in a few days. After the initial response to the questionnaires, most Bulgarian companies will find out that their score is not too good. That's very normal. I hope that is where our colleagues, consultants, will step in and help them to understand what they need to do after this first initial assessment. Now, I'd like to say, to speak a little bit on what it is that we evaluate, and I'm sure that that is what needs to be evaluated. So besides the E, S, and the G, it is important, in my opinion, to evaluate the industry of the company, because it matters, obviously. So we have that in the platform. And also the general business approach, strategy, policy, whatever you like to call it, of the company to this subject matter. Which is why in our questionnaires and evaluation, the companies will find that out. Those are the industries grouped in our way, but those are all the industries that exist according to the European classification. That is an illustration of our score, the score that any company would receive. It would be, after they fill out the questionnaire, it would be an overall score. There would be the E, S, and G components, and there would be the industry component. We think that that will cover anything that the company needs to evaluate, as long as they get the answers with the help of our colleagues in consultancy. After they've been evaluated, besides the certificate, which would look like that, they would also get an action plan, which would be a set of advice, recommendations, suggestions on the main areas where that company needs to focus in order to become more compliant to ESG regulations and regulatory framework. So this is where we stop. We don't go further than that. That's where our colleagues in consultancy will take over. But we do give some basic focal points on where a company should focus from there on. I'd also like to say that this platform is almost a non-business initiative. We expect to collect data with it. So the companies are welcome to invite other companies. Therefore, they will have no charge. So this is not really about money. But if they do not invite anyone else and evaluate only themselves, they would only be paying something small every year in order to contribute. This is very natural for data companies such as ourselves. When we go out to gather data, we usually partner with the market. So the market is the one that can feed any such initiative. Therefore, that's the market's contribution. Now, I understand my time is almost up. Obviously, I'll be very happy to speak to any one of you at any time. I am leaving my contact details at the end of this presentation. I'd also just like to say that for listed companies in Bulgaria, you can obviously access our platform anytime. But you can also, starting in September, access it through the Bulgarian Stock Exchange, with whom we have a partnership. We are going to be linking our system to theirs so that the listed company doesn't have to go to two systems. As I said, we belong to the financial world. Also, the Bulgarian banks and some of the Bulgarian universities, such as Sofia University, are partners with us in this initiative. So they too will have customized or special access to the system, customized to their own needs. Well, thank you very much indeed. And if there are any questions, they're more than welcome. Yes. I can. I don't know if everyone else can.
My question loudly. Okay. Sorry, I'm putting my auditor hat here.
Yes.
The outcome of that assessment or the score will very obviously depend on the quality of the answers to the questions.
Of course.
So how do we, and I know it's not up to you, because obviously the companies will need to assess their suppliers, their customers, their own customers. How do they ensure that the responses they get are genuine, that they're the true responses they should be getting?
So any system such as ours has all kinds of logical, mathematical, and data checks inside to make sure that what goes inside is not total rubbish. Besides that, however, there's no way in the world that you can make sure, if I tell you that my electricity bill is what it is, you cannot, unless you go and check with the electricity supplier, you can't verify that. So we do what we can to verify what's inside. And we are capable, as this is what we do all the time. But at the end of the day, the company puts inside what they put inside. There are files inside, obviously. So there's proof of what they've put inside. But they're the only ones who know whether that's true or not. On the greenhouse gases, we have an inbuilt calculator. So once they input some data, like what kind of fuel they're using and the rate at which they're using it, the machine will immediately calculate their carbon footprint and they have it ready-made. So that's a calculation. It's very simple. But not all the data is that simple. Obviously, you can verify how many men and women they employ if you go to NOI. But apart from that, it's a machine. Once the data collected in this machine goes out to our systems and people are added to it, but that will not happen for any given company, then we will verify further details. But on a mass scale, we do the best we can, and we are the best in the field. So if that answers your question. Yeah. All right. Thank you. Yes.
Добре ли?
Уважаема госпожо Пеева, уважаеми организатори, поздравявам ви с високо организираната инициатива. Скъпа госпожо Декова, към вас имам конкретен въпрос, защото бях провокирана от интересната ви презентация. Две неща ми направиха огромно впечатление. Първото беше, че много хубаво свързахте отчетността, ESG отчетността с утвърдените 17 цели на устойчиво развитие на Организацията на Обединените нации, защото тези две инициативи са неразривно свързани. Второто, което ми направи високо впечатление и много голямо, беше панелното разделение, 5 панела – икономически, социален, екологичен, плюс governance, включая корпоративното управление и отрасловия аспект, който е много важен. Тъй като аз съм академично лице, ние също провеждаме изследвания и ако питате академичните среди, аз ще кажа, че ние сме най-добрите в Института по икономически изследвания на Българска академия на науките. Аз съм ръководител на тези проекти по отчитане на устойчивостта. И искам да ви попитам относно тази платформа, която вие считате, че пионерски откривате. Тя ползва ли глобалната инициатива за отчетност и нейните индикатори, Global Initiative Reporting? Ще отчитате ли също стандартите и тяхното прилагане в предприятията? И още нещо, споменахте, че се свързвате с борсата. Това е много логично и много важно, но информацията от листваните компании е само една малка част от бизнес информацията за всички останали предприятия. Ние сме правили и кейс стъди на предприятията, както мисля, че сега вие ще правите кейс стъдита по въпросник. Не знам количественото съотношение между количествени и качествени индикатори, нямам информация. В последно време обаче ние ползваме данните на Националния статистически институт, които обаче не ни се предоставят по фирми, а big dates, т.е. по отрасли, малки и средни предприятия, те са групирани и ние срещаме много големи трудности при анализа и отчитането и анализирането на данните на предприятията. За това може ли да дадете някакви пояснения, каква ще ви е методиката за събиране на данни и съответно на обработка на тези данни, защото виждам, че ще ги предоставяте и на европейско равнище. Ние работим с евростатистиката и сме свързани с официалните индикатори. И въпреки това срещаме много големи трудности. Успех ви желая, ще следя инициативата. Успех, госпожо Пеева. Поздравявам всички колеги, толкова интересна информация получиха тук, че благодаря.
Well, thank you very much. Thank you very much. First of all, I'd like to say that we'll be very happy to partner with you as an institution in every possible way. Bulgarian scientific area is definitely most welcome to partner with us. No doubt, we have not discovered sustainability. As I said, we're just a part of it. And most certainly, we base anything we do on GRI and any other global, local, and European legislation. So our questionnaire, which is about 100 questions for a larger company and about 40 questions for an SME, are all based, and inside the platform it says exactly where and how and why. They're all based on the GRI and similar regulatory instruments. So yes, certainly, we are plugged into the socket of global, local, and European legislation. Otherwise, we couldn't do it. We would be shot dead by the European authorities. Now, the data. This tool is about collecting company data from the companies themselves. In this tool, we are not going to add anything. We can add it outside of the system for other purposes, but this system is about collecting data from Bulgarian companies. And we have just started, so it's a rather empty system as of now. I imagine that once the bank's on board, it will be quite full. But the difficulty will be not how many companies we've invited, but how those poor companies will respond to the questions. And it's not about the number of questions, it's about the difficulty of this subject matter, as the colleagues in consultancy pointed out. So this is only about collecting data from the companies. We're not going to be adding to it. We are obviously in contact with all the Bulgarian authorities, such as the Trade Registry, NSI, NOI-NAP, anyone that has public data, because we are a rating agency. So we collect all kinds of data. We build our own data. But this particular tool, the purpose is to collect from the companies this missing part, which is the ESG part. So we're not adding anything to it. Otherwise, we do have data globally on physical and transitional risk as well, the materiality of any company's risk. But that's a separate database. And it's not from Bulgaria, it's usually on a global level. Right, thank you. Yes?
I think maybe, can you hear me? Yes. No, thank you very much for the interesting presentation. I have an observation and maybe also a question or more a comment. This approach that you gave is discussed right now at the EU level in terms of the ESG rating proposal that's on the table. For good reasons, because a lot of issuers has challenges in finding different rating assessment on this ESG path. So with sometimes concerns because they didn't understood why they were rated this way. So transparency on methodologies is something that I think would give a better level playing field in terms of understanding the direction of travel. And also maybe connected to that, this morning we discussed the SRS extensively.
Yes.
Do you think that the current proposal that you display is will or is or intends to be also aligned? Because there are some criteria that are materiality subject to materiality assessment for the companies. So I think it's a way the connections and the transparency there as well is very important for the corporates in order to really well understand the direction of travel.
Yes. I quite understand. Thank you for that. Yes, absolutely. We are fully aligned to, but the IFRS is not directly related to sustainability. So as a credit rating agency, we are definitely aligned to all international standards, including the accounting standards. But that would apply to our normal credit rating rather than to our ESG rating. And in the ESG field, I think for everyone, it's a first. By the way, I never said we were the best. I just said we were one of the best because there was a comment there. Certainly, yes, I completely understand what you're saying. And as I said, we would, if we were not aligned, we would not be a rating agency. And this is a process. It's not something which starts and ends. It goes on all the time. ESMA does control us and govern us. So we will continue to strive for excellency as until now. Right, thank you. I think that's it.
Thank you so much for this very nice presentation. That's for you. Yes, thank you very much. Let's invite the next speaker. Just a second to present you. So this is the last presentation for today, the last panel. I would like to invite here one very well-known speaker in Bulgaria, Dominic Brancati. Dominic Brancati is not only very high-level professional, but also a big friend of the Association of Investor Relation Directors in Bulgaria. He's a speaker in many our events, also a trainer in the first IR masterclass. That's you. It is a big pleasure for me to invite on the stage my friend Dominic Brancati, Global Chief Operating Officer from Georgeson, who will present you how the capital markets can be a driver for decarbonization transformation. Please welcome. You can. Yeah. Good.
Can everyone hear me? Is it working? No. Okay. Maybe he has to push a button there. Okay, I think it's working now. Zdrasti, kake? Everyone good? It's the end of the day, and I think I'm looking at the time. I'm going to try and make a 50-minute presentation into a 25-minute presentation. So let's see how I can get that going. But look, I was going to ask some questions at the start using Slido, but I thought, you know, we're out of time, and I'm not sure whether everyone has Slido set up on their system. Thank you everyone for sort of inviting me to talk again on a different topic than what I normally talk about when I come to these events, but really on sort of capital markets and decarbonization. But I'm looking at it from an investor point of view. As you know, we deal with investors all the time. Our priority is helping companies. But look, we all understand the urgency that there is to address climate change, and that, you know, companies, especially sort of large listed companies and companies around the world, are increasingly sort of being held accountable with regards to their environmental impact. I think the you know, decarbonization, transformation, I think that is really presents both opportunities and risks, and I'll talk about that later. But I think through effective capital market strategies, we can, you know, work together to ensure that we you know, unlock the potential for sustainable growth amongst our different countries. I think, you know, it's a tough one because investors are becoming, you know, increasingly, I think, more, you know, more demanding on companies, you know, listed companies such as yourselves. I think the issue there that you have is that they're asking for, you know, more information, more data from yourselves. And we heard from the last speaker, the collection of data. I think that, you know, let's not be shy to say this, investors are also have too much data, and they themselves are trying to work out how to analyze the data around E and S. You know, I think, you know, the integration of ESG factors into investment decisions, you know, it's not new. It's been happening for a very long time. It's just there's a more of an impotence from not only governments but from investors themselves, and that comes from the underlying pension holders. You know, you and me, who, you know, we all have pensions, and we're the ones asking the questions. We already know what investors are doing with our money. We just want to know what they're doing with our votes and how they're bringing companies to task on issues around E and S. Governance has been around for a long time. It will still stay with us. You know, I think really when I thought about this topic, I thought about, you know, the collaboration. and we're seeing a lot more collaboration between companies, investors, governments, and so on. And you know, that's when you look at it, each have their own individual agenda. But if we can sort of get people talking together about these topics in markets where perhaps E&S isn't as prominent as it is in other markets, then I think from a Bulgarian perspective, I think you'll see that there's added value there. And, you know, the local pension funds here, for example, issuers and government talking about what you want to see with respect to the issues around E&S. I think it's interesting because we talk about sort of transition risk and we talk about decarbonization. I was in Australia not that long ago and I was meeting a company and they're moving into sort of cleaner energy. And what had happened was they had a very big plant and that plant got demolished because they were building a new greener plant. But what happened in that, and so they were ticking the E box, but the only sort of workforce in the area came from a small town. And when they demolished the plant, all of those people lost their jobs. And so there are risks when it comes to what we're talking about today. And companies, it's very difficult for companies, whilst they're trying to achieve one element of ESG, they might be imposing on another one. And in this case, it was the S. And so the local government at the time said, well, what are you going to do about this? You know, we have an entire town that's lost their jobs. And so 95% of the workforce needed to find somewhere new to work. And many people were leaving that town. So, you know, transition risks, I think, arises you know, from the shift towards the low, you know, carbon economy. But I think we also need to be careful about how we do that because we're also affecting, you know, sometimes in this case, people's lives. The other side of it, you know, I already spoke about, you know, investors increasingly, you know, demanding greater transparency and disclosure. The problem with that is that each investor has their own view on what transparency and disclosure is. And so companies are finding it difficult because one investor might want more information on one subject versus another investor, you know, not really caring too much about that information. So I think we need to look at it, you know, it's tough to make everyone happy. So I think the important part here is, you know, on this slide, I'm talking about really the market approach to decarbonization. And when I talk about active equity investors, I also talk about large index investors. I also feel that they're active as well because they have large ESG teams. They're the ones that are knocking on your door asking for information on your ESG practices. So, you know, one could argue that they are active as well. So when I talk about active equity investors, I also include index funds. And I think, you know, they play a crucial role in driving decarbonization. They're actively engaging with companies. They're looking at you know, the discussions with companies to influence their decision-making process when it comes to whether or not they're implementing more or less capital towards certain sectors. I also think, you know, let's not forget, they conduct thorough analyses. There are very smart people at these institutions who are, you know, who are PhDs in E&S and G and understand the effect just as well as, if not better than some companies, on certain decarbonization issues that occur. And so, you know, they spend a lot of time looking at your company, understanding the risks on what they're asking you to do. So before they come into a meeting with you, they're already understanding what those issues are. I think, you know, active investors are integrating the E, S, and G factors into their investment decision making. That's not rocket science. It's happening all the time. But, you know, I think the prioritization of their engagements have changed over time, where they spent a lot of time talking to you about governance and the issues of your board and perhaps diversity or other factors when it comes to G, maybe remuneration. Now they're coming to you and they're asking you about your environmental and your social side. And I think from a I think the other side of it is, and we can take away from this slide, is the active engagement on leveraging their voting rights. And so if they're not happy with what you're doing as a company, what your board is doing, what the transition to net zero is, they will vote against certain directives. And we've seen that in the past, and I'll get to that. I think this is another very good slide where we talk about the stepping stones to active investment and active engagement. And so what we tend to find is a lot of companies are doing regular engagement with their investors. They're talking to them about the issues that matter the most. But if the investor isn't getting the answers that they want, what we're seeing and have always seen is that they then start to go onto a target list for that investor. That investor will then have that company in their sights and will scrutinize that company even more. And then, the other mechanisms that they use, as I spoke about, voting against management. Once they've voted against management, 9 times out of 10, that company will give that investor a call to say, hey, what's going on? You voted against my chairman. He's not happy. And so more engagement happens. But then again, if what we see in many cases, the company not taking notice of what investors want, then there is what we call shareholder activism. And for those that have heard me talk here before, I've spoken many times about shareholder activism, and then in some cases it's divestment, so selling out of the stock. Now, index managers can't sell out, and so they're going to be more and more engaged and on companies' backs about these certain issues because, like other active managers, they just can't sell out of the stock. By the way, you can ask me questions throughout this presentation. So I think the sort of really what I want to show here is the the portfolio strategies of certain investors. It's quite simple. It's not rocket science. I think when we look at it, in this case, you've got 2 types of investments. When we're looking at it, you're looking at fund portfolio strategies by equity based investors, and they're broadly categorized into 2 main avenues: investing in low emitters companies, or transition enablers as we call them, and investing in emission improvers with credible decarbonization strategies. So the low emitting companies, that's a lot of the funds, it's about identifying them, allocating the capital that they have to that portion of the investment. And they're really sort of looking for companies that have already got a track record in, low greenhouse gas emissions and things like that. I think, certain companies include renewable energy, for example, sustainable transportation companies, and things like that. I think, the other approach is transition enablers, which are companies that provide sort of goods and services, and that can facilitate the transition to a low carbon economy. Again, these are renewable energy infrastructure developers, energy storage providers, carbon capture and storage technology developers. So I think just sort of the takeaway here is, on the right hand side, you've got sort of high emitters, but they're on a path to net zero, or they're transitioning. And on the left-hand side are those that are already, doing good for the for sort of the country and its people when it comes to they're already on the path, or they're helping the companies on the right-hand side get on the path. Again, this is about screening, really, how a lot of the sort of portfolios screen out some of the larger sort of gas emitters, and so a lot of the portfolio companies will exclude certain indexes. They'll exclude certain companies within their funds. I think a lot of them, there's a wide variety of approaches for many different investors, but really this slide was to show you that there are a lot of questions that investors ask when it comes to what their screenings will be for certain investments that they make. You have the ratings providers that they gather a lot of information from. You also start to see that they may decide to invest in a high carbon intensive company, mining, for example, but they will screen them out at some point if they're not moving along their net zero approach. Again, there are a lot of ETFs out there, ESG ETFs, which have come up, and so those ESGs are screening out a lot of the high carbon intensive emitters. This is an example that I've pulled off. Really, AXA have, when they look at their screening of companies, they know what target outcome they're looking for. They have the KPIs that are set, and they then go and actively engage with companies around this set of targets and KPIs. And so they range from climate to habitation protection, and right through to sort of forests and landscape. This is Allianz, for example. Allianz is focusing on sort of GHG hotspots, greenhouse gas emission hotspots, and focusing on companies that have the largest climate impact. And so the portfolio, and I guess arguably the world's energy system, can only decarbonize as fast as sort of the biggest emitters. So they're putting their focus on those big emitters. So we do a survey every year, and within that survey we go out to large asset managers, large index active, and we ask them several questions on sort of what their views are when it comes to the hot topics of the day. And so here we have HSBC, Schroders, and the like, and I think really here what we're seeing is, and you'll get this deck and you can read through it, each investor, although on the same track, are looking at different views on what they do. So you have Schroders who here have been doing what I call the E and the S for a very long time. They're very clear on their climate risk and oversight, climate alignment, climate adaptation, carbon capture and removal. Amundi, another, if we look at them, they're very clear in what they expect from the companies that they invest in. So you can read this later at your leisure. So here we have sort of from our survey that we did, 47 trillion of assets under management. What we see here is that a lot of the companies that we spoke to, are signatories of Climate Action 100, for example. I'll go into that later and what that means. You have a large percentage of the net zero NAZAM, net zero asset management signatories, and many of them are of the UK Reporting Council and Stewardship Code. So with really the findings when it comes to E&S or climate, as we call it, from a sort of a Georgeson perspective when speaking to investors, a lot of them are, expect carbon-intensive companies sort of to include GHG emissions into their executive pay. and that's to align the executives to, you know, what the investors want them to achieve when it comes to their net zero transition. Really interesting, right? Because what would be the average tenure of a CEO of a company, for example? So if you were to look that up, and then you were to look up the transition plan for a net zero, will that CEO still be in place when the transition happens? And so what investors are doing now is wanting to align executive pay in a shorter term frame so that those CEOs, as they move along within the company, one leaves, another one comes, their actually pay is affected whether or not they're moving along with those targets. So really interesting, long-term nature, long-term incentive plans being affected by this. Now, will that happen here in Bulgaria? I'm not sure, but I think when you look at some of the larger companies out there, on some of the other indexes, they've been putting under a lot of pressure on that. Sort of hit them in the pocket, as they say. Another slide here on climate escalation. I think, as I talked about this previously, investors are willing to end their engagement. They're willing to, vote against directors. They're willing to put say on pay resolutions forward. And so what we've seen here from our analysis is that obviously a lot of investors talk about a case-by-case basis because that's right, but we're also seeing an increase when it comes to putting pressure on companies from an escalation point of view on voting against or putting say on climate proposals forward. So, say on climate votes. I did an analysis. There were no say on climate votes on any companies in Bulgaria to date, as far as I'm aware. So during the 2023 AGM season, there was a reduction in the number of say on climate votes. I said say on pay before, I mean say on climate votes, put forward by companies compared to the previous year. In the first sort of, in the first months of sort of 2023, the climate sort of resolutions decreased from around 29 in 2022 to 17. So it's around about a 41% decrease. Portugal and Germany were the first, had their first say on climate resolutions put forward, company-sponsored say on climate, and there was a very first chemical company, Alzem, that put a say on climate resolution. Credit Suisse had a say on climate resolution that was the lowest passing rate at 53%, but Credit Suisse also had other issues. So. If we look at the volume of proposals, I think what we've seen so far is that a small number of companies are still putting forward board-proposed climate resolutions forward. I think the first mover advantage back in 21 has gone away. Why is that? Investors were more lenient on companies. Investors let them really let companies sort of find their feet. I think we're now in 2023 and investors are more critical of companies and on their say on climate resolutions that they put forward. Here's a geographical distribution, if that helps, where board proposed say on climate resolutions were put. Majority, we have France and UK. Obviously, Portugal started this year. Germany started this year. Switzerland and Spain. And then let's look at shareholder support for say on climate resolutions. So this is really telling. When a board proposed say on climate resolution is put forward, you're getting over 90%. A couple of the ones down here, I mean, Shell, Glencore, big extra, these guys are creating a lot of greenhouse gas emissions, and they're working towards a net zero transition. I'll talk about those later on, but Credit Suisse Group, again, that's an outlier because of what was happening with them in the last. But if you take Credit Suisse out, I think we're at 92% average support. With Credit Suisse in there, you're at 91. Still very high levels of support from investors for companies on their, say, on climate resolutions. I think this is an important slide to talk to you about, simply because just to show sort of the spectrum of investor opinion. And I think you look at sort of LGIM, for example, Legal and General, have concrete expectations and a list of criteria that it thinks every company should have within its climate transition plan, and versus you have the likes of BlackRock, Vanguard, and Norges, who have various different views of what they feel those targets should be. And so imagine you're a company and you have all of them in your stock and you're trying to go and meet them, and they're all talking about the same thing, but they're asking for maybe disperse views on what the targets should be and by when. And so it's always a balancing act for companies to really understand. And these are only this is only 5 investors. Companies have hundreds of institutional investors. I think I'm going good for time, right, Danielle? I'll keep moving. Collaborative engagement. This is my favorite subject. This is all about how we can all work together, companies, investors, regulators, governments, and all the different standards that are out there. I think investors influence the reporting frameworks from what we know of companies, so that they sort of have the necessary information in order to make informed decisions. There are investor initiatives that solely focus on climate engagement or specific niche, such as climate bonds. I haven't even spoken about them. That's a whole nother session on green bonds, right? And then these initiatives also ask investors to sign up to them. So Nizam, for example, Net Zero Asset Management. I think some initiatives have a more general focus, such as the PRI, and I think they're on climate change, obviously, and it's still a priority, such as the SDGs, which aim for a just climate transition. But imagine you're a company. You are companies. You all work. You're in investor relations. This is what you have to deal with. Now, maybe ISSB is going to help with that, but it's still yet to be seen. I won't talk too much about the ISSB. I don't know whether it was spoken about this earlier in the day, but really it's only just come out. What I can tell you from an investor perspective, and the investors that we've spoken to, they prefer the ISSB. It's consolidating the reporting frameworks, focused on financially relevant material, and really what they're saying is it's there to try and create a global baseline for sustainability reporting. And so that's really important. I think the ISSB is structured so that it uses the TCFD framework. So I think I won't go into too much detail on that, but we're getting positive reaction from the institutional investor community. Really key difference between CSRD and ISSB. I think the rationale behind sort of the GRI is similar to standards introduced by sort of the EU, and that covers a multi sort of stakeholder or double materiality focus on reporting on all sustainability matters, right, that have significant positive or negative impact on people, environment, and economy. I think this therefore, I guess, really covers more ground than the TCFD ISSB framework in terms of topics and disclosures. So I think that's what I feel is the difference. Now, I'm sure people will tell me different, but that's my view. But the investors love it. Investors, PRI, have all said that they welcome it. And BlackRock's quote shows that investors prefer this framework because it's aligned with TCFDs, and that the framework provides a template of how investors would like to see information presented when it comes to sustainability reporting. I won't go into too much detail on that. Investor influence on CSRD, really, for them, it's more about ensuring interoperability with ISSB. Investors want these standards to be relatively simple to implement, and creating two diverging standards, that causes a reporting burden for companies. They're not really looking for that. A lot of the investors thought, and other agencies thought CSRD standards were thought of having too much or too many complex requirements with far too many metrics for companies to try and collect data on, more around materiality and that. Climate Action 100. So really, what you need to know as investor relations officers is that one investor can come knocking on your door and cause you an issue when it comes to really putting pressure on you on E, S, and G. But when you have a collective engagement or group of investors, then it starts to create more leverage. And so Climate Action 100 is really a group of different but same thinking groups to collect additional power to go out to companies to take them to task on their E and S, and also some G. And it's really around sort of the scope 1, scope 2, and 3 sort of emissions. And so just the takeaway from this is it's not one investor that's knocking on your door, it's a collective group. And that's where the pressure starts to come on. So we're here to talk about capital markets and how that, how they can help with decarbonization. I think if you look at it from an investor perspective, you start to see that there are so many different types of what we call shareholder activists or active investors. And here it's you have NGOs that are out there knocking on companies' doors, right through to which are on this side, and then on this side you have a whole bunch of investors, action groups that are out there really taking companies to task. I think this is an important slide. I think here it talks about the NGOs, so non-profit government organizations that are out there knocking on doors. Just Stop Oil. You should have, maybe read about Just Stop Oil or seen them in the news. They're the ones that go around and spray orange on different, whether it's roads, whether it's on shops or things like that. And so you see them all over the place. Obviously, we all know about Greenpeace, and Extinction Rebellion is also another interesting NGO that's out there that causes issues for companies. This is at an annual general meeting. So this is Total's annual general meeting, and there was tear gas release. So I don't know how many people attend your annual general meetings, right? Imagine this at your annual general meeting, and so what I'm trying to say is that there were all these groups are very powerful, and so I was at another. This was an oil company. I was at their annual general meeting, and protesters got in. They were sort of disguised as shareholders, and then as the chairman started to talk, they then sort of stood up and started protesting. Another AGM that I was at was an insurance company. They wanted that insurance company to stop insuring all the large gas emitters, and so they actually superglued themselves to the dais where the chairman was going to give his speech. So let me quickly go through this. I promise I'm almost done. These are the various different NGOs. You can read through this. It will tell you what their process is and how they attack various different companies. Some are through litigation, which is Client Earth. Some only look at the chemical sector, ChemSec, and so on. Insure Our Future only looks at insurance companies. And I think this sort of, maybe I should close on this slide with the way they work, that some, especially Share Action, which is a large, NGO, but I call them an activist. Their job is they create reports, they teach people how to go to annual general meetings of companies. So imagine in Bulgaria, there's a group of people that call each other and say, I'm going to teach you and tell you what questions to ask at Mombat's AGM or whoever. And then they go in and they have these pre-list of questions and they all stand up and they all talk about sort of what their agenda is. And so really that's what they do. And so there is a website you can go on and they will say, if you want to join our group, join. And then there are webinars that happen on how to attend an AGM and things like that. They also engage with other shareholders as well. So they speak to the large institutional shareholders to try and get their views. And they co-file resolutions at annual general meetings as well. I think I'll stop there, because it's gone over time. But thank you very much, everyone. I know that I'm what's between you and your weekend, so thank you for your time.
Maybe there are some questions from the auditorium. Ако говориш английски, на английски ще попиташ, добре.
Dear Mr. Brancati, thank you very much for your presentation. It was very interesting. In this relation, I have any questions. Your presentation was on the field of social responsibility investment and in capital markets, investor view. This was very interesting. In Bulgaria, international company for cigarettes company Philip Morris became the national award for social responsibility company. The beer company Kamenica became the national award for social responsibility company. My question is, according to you, which indicators has the highest relative share by negative screening of companies in your praxis?
Yeah, that's a good question, because the negative screening that you talk about, each investor is different, and each investor looks at, I remember once I spoke to a fund manager many years ago, and the fund manager said, I cannot get out of tobacco. It makes me so much money every year in my fund that if I were to screen out tobacco, then I may not be able to get the returns that I need for my investors to keep giving me more capital. So, the negative indicators that you talk about, I think, and I know when you look at it from an E&S perspective, you can't do it in isolation. You have to look at the G all the time, the governance side, because if it's not a well-governed board, you can still be, as you said, tobacco company or a beer company. I like Kamenitsa, by the way; it's very nice. But if your board isn't well governed and you can't, and the board doesn't understand the issues around the E&S, then whether you're a tobacco, a beer, or a miner, or you could be a company that doesn't release that much GHG, there are still going to be issues across the board. So I hope that answers your question.
Thank you from my side as well.
Thank you.
This is you.
Oh, thank you so much.
Kids.
Thank you. Thank you. Okay.
Okay, this is the last presentation, but the last speech. So I would like to invite here the OIN of Bulgarian Corporate Governance and the main creator of the National Corporate Governance Commission. This is also my professional mentor, Professor Bistroboeva. Please welcome to the stage for the closing remarks of this very interesting conference.
It sounds very open. Okay, thank you, Daniela. I tried to speak less than 15 minutes because you are tired. And as Dominic said, my presentation is prior your weekend. First of all, thank you everybody for attending this conference. Thank you everybody that you stay with us till the end of the conference, right? Because from maybe some of the presentations are very inspiring, some of the presentations are so very high level, but maybe we also have the chance to listen to a very, very informative and inspiring presentations. When I use the word thank you for coming here, attending here, also to the presenters, to the organizers, I also mean that it is one of our conferences on corporate governance and sustainability, and I'm very glad that we managed, because we are on this track for many years. Danielle is in front of me, and when we are working on the first edition of our National Corporate Governance Code, at the end of the code, we have to have an input about ECG at that time. But we are not so, how to say, happy. It was many years ago, how to do and what to do. Step by step, we, as was mentioned in the very beginning, we try to align our code with the topical issues as well. The regulation in Bulgaria is aligned with the European framework, EU framework on sustainability. And last, it is my secret, it's one of my favorite topics. I'm working on sustainability and CG for more than 7 years. I wouldn't like to bother you with some very sophisticated closing remarks, but I would like to start with my way of interpreting your presentations, your questions, your discussions during the coffee break, during the lunch. What we have today, we have 5 panels, we have 13 presenters, 13 panelists. We have 1 minister, and I'm very glad that Minister Rumen Radev made it to start and to come. No excuses, no excuses. He came. He promised to Diana, and he came. We have people from OECD, we have people from issuers, European issuers, and other companies, and of course, Bulgarian companies. I would like to point out that the topic for the conference is very brave. CG and decarbonization. It's very, very brave. It is inspiring topic. I know some people in Bulgaria are skeptic, first of all, concerning decarbonizations, and second, about the contribution of capital market, about the companies to this issue. But it is a real challenge. How does corporate governance will contribute to this global problem? And today, in the latest information from Reuters, it was said that Europe needs 7 billion euros in order to reach the goals for transition. I wouldn't like to bother you with any facts. Also, this conference contributed in terms of knowledge sharing, and to a certain degree, benchmarking where we are and what we have to do. And for me, it was very important that all speakers focus on the quite practical issues. Also, what people are doing at the level of OECD, what people are doing at the level of European issues, what companies are doing in terms of metrics. Because for today, it's very important for us to work and to know how to use metrics alone or with consultants. It depends. What are the key messages? What are the key messages or takeaways? It depends what you prefer. Maybe you're hungry and you prefer takeaway. Minister Radev said clearly what are the priorities in the energy sector in terms of carbonizations. One of the most topical sectors, especially because it goes about the just transition, social issues, and it also goes about money. We also heard about the interesting example about the Bulgarian energy holding and its high ESG rating. That's very important. We are honored by Fiona. Fiona is not here. That's good. That's pretty good. Okay, she has a meeting. Okay. We are honored by Fiona Jordan to share with us the latest developments with, in terms of OECD principles. And be advised that it is real truth that she shared with us for the first time in public. A few days ago at the CODA level, but it was quite short meeting and few people attended, the chief economist of OECD shared certain issues, but it is privilege for us to listen to the topics of the topics of OECD, and the focus was about the regulators. I would be very happy. Unfortunately, we had one representative of regulators to be with us. I would be very glad regulators to read these new principles, but because OECD principles are also about the regulators, not only about the companies. The focus was about the sustainability and resilience and health respiration and responsibilities of the boards. I think it's a great message for us that the boards are also among the leaders for these transitions, also because I'll share my view at the end. Practically, she sticks to the framework, or she sets the framework. The organizers of this conference elaborate and offer to you at the very beginning. And practically, this framework of the conference and what we heard about the OECD principles was practically developed through the various panels. The first panel talked about sustainability, but key message for me was that it goes about the new competitive advantage. It doesn't go about the cost drivers. It doesn't go only about innovation. It goes about how we as companies could improve our competitiveness on the local arena, on the international arena, when we focus on sustainable issues as well. I think that still part of the companies miss this focus, that sustainability is competitive advantage. This is a key message that people from this panel sent to us. And also, I like very much what Mrs. Trojanska said, that it is something before reporting. And I think she put very, very interesting focus that we have to not only to think about how to report, whom we have to ask to prepare our report, what money we have to deliver for this report, but we have to change our business model, accordingly. And because of the change in this model, we could have data for the reports, for the auditors, and for the society. I stop here. Also, I think that this topic about reporting as a driver, regulations as a driver, was echoed by the CFO of Mombad, because CFO of Mombad attract our attention with a clear message that when they start to report on the taxonomy regulation, they have to see what is going on and what they have to change in their business model. And here I would like to underline again that all these regulations are because we are market economy. We could not have planned from the government what to do and how to do. But through this regulation, we are pushed to, or I wouldn't use the word enforced, we are pushed to work on this issue. So be advised, I know what is to work with company. I'm not only university professor at present, but be advised that it is one of the real messages people here at these two panels and all these panels deliver to us. We have also, when we talk about the issuers and investors, I very clearly listen to the representatives of pension funds, and the message is no instrument for investing. Here we have Dominic, he told us about the green bonds, all these things. But we know that, and I very much, I agree with Evelina, that we do not have financial instruments for attracting sustainable investment. Why do not green bonds issued by the state in order to support sustainability and resilient facility in Bulgarian's translated plans, or for decarbonization? It's not my responsibility. We have government, we have ministers. But I think that we can send these messages in a very short way to all these people. When we talk about about the key messages we got here, it goes about also about the shareholders, and here was mentioned by Dominic about the stewardship. And I think I clearly, yeah. And I think that it was very practical way when people here talking about the shareholders, capital markets, and their engagement. We are not talking about the directive of shareholders engagement, not blah, blah. But we're talking, people here talked about quite practical things, what to do and how to do. And of course, one of the key issues was the disclosure. We heard a lot of we have panelists about the disclosure. We focus on their experience. We have people like Florence, we have people like Evgenia, and they offer us quite practical information. Also Yavor as well, excuse me for miscommunication. And clear was it. It is very important to have these metrics because let's be honest, we know about non-financial declaration and ECG since year 2016 we are reporting. Practically it is ECG, it's nothing called. Because the non-financial directives was based on GRI, that's for sure. And today, some people are inventing ECG. No, we are just continuing this journey. Of course, during the discussions, there is another message. It was very sincerely commented by certain presenters, the problems about the data, the problems about the lack of motivation of boards for sustainable behavior. We heard this from Poland, that there is no link between remuneration and the ECG or sustainability. But be advised that it is not only problems in this part of the world. Yesterday was published a survey of Fidelity, its fund manager, and they disclosed that through their survey, they found out that 50% of the companies that disclose ECG information. This is not supported always by activities. I'm trying to be very careful in referring to this information. And also, they say again that it was only 50% of their respondents answer that only 50% put together the remuneration and ECG politics of the companies. So I think that we have not only to blame us, that's why I use this data that, as I usually say, breaking news. And fine, of course, in a nutshell, I would like to, again, to refer to the CFO of Mombat. I think he's not here. He is doing his job, and I'm doing my job here. He was very careful, and we moved from the sprint to marathon. But I would like to underline, shall we use marathon a journey? It depends on your attitude towards sports and games. But we are not in the very beginning, as I said. It is all, we are just here on our way, and it is today it's a kind of milestone on our future work. So it is a journey, and I'm here this not I hear this word not for first time, and I was glad that CFO focus on this issue. The second thing I would like to underline in a nutshell that we listen certain words, we are exposed the information quite detailed, unpublished from the kitchen. And I think because here was said very interesting thing. I think I'm not wrong. Fiona said that maybe in the fact book, Corporate Governance Fact Book, OECD, edition 2025, our CG results will be embedded. I'm not quite sure, but I think that it was her key message. And also, I think that many of you, not using this sophisticated word, holistic approach, but practically they told us that we have to work together, or we have to work to start with our, or to implement our collective effort. Dominique said in a few minutes ago, collaborative, right? So practically it means that all people, all players, shareholders, investors, stakeholders, boards, and of course the regulator have to work together. And I would like to be excused, but listen to the NGOs activities and what they can do. I'm glad that it doesn't happen here in this part of the world, but I would like to just to offer you another point, the famous suit that was won by NGO in the Netherlands. They sued the Shell company, because of pollution, especially in their oil fields in Nigeria, and they managed. The suit took about 2 years, but at the end of the day managed, and I'm not quite sure, but Shell moved their headquarters from Europe, Amsterdam to London. I think I'm not wrong. So, of course, we have NGOs, but let's do not forget. But my point here in this nutshell, number 3, we have to work together. And I'm strongly, how to say, advise the regulators not to enforce us, not to, but to work to us together, to help us how to prepare these reports, how to make our life easier, because at the end of the day, we have to work together. And finally, or not finally, but it's my prior final remark, I think that at least we have to work together today, not tomorrow. And I like very much the saying of the very famous and very influential politicians and journalists, Thomas Friedman, that says, it's not for my grandchildren, it's not for my children, it's for us. It's for us. Because usually when we talk about sustainability, it goes about the future generation. No, it's for us. So that's why I'm trying, I like this, it is part of his book, about the crowded, overheated world. Nice book about the problems we face. And finally, I think that this topic, CG and decarbonization, is about the new challenges we have to work on. It's not a slogan, it's not a motto, but it is just a thing we have to work on. And do not forget, it's another secret, that there's some talks about the opportunity Bulgaria to host COP29. 28 will be Abu Dhabi, but still there talks about hosting COP29. Of course, it was reported on the conference Green Transitions certain weeks ago. So that is for me. I think that I managed in 15 minutes to offer you my views, not lecture, but I'm very glad to hear various speakers, various questions, and I'm very glad that it was delivered for us. It was delivered for us for free, because provided we decided to register for seminar, we have to pay a lot of money. Thank you very much for listening to my closing remarks, and good luck. As well.
So, some closing words from me. Thank you very much again for being to the final with us. Thank you for all the speakers, for all the panelists, also for our sponsors, for our partners and media partners. Hope that this conference was useful and interesting for you. And I would like to wish you a pleasant weekend, and we're looking forward to welcoming you again in our future events. Thank you. Bye.